And they were down about 1/10 of 1%, but still best compared to the rest. Bottom of the pack real estate down 2.1%. All 11 major industry groups were down for the.
Yeah, I mean, listen, the market certainly took a turn after those Fed minutes came out, and there was nothing, at least initially, that indicated that there was something to be too worried about. I do think, though, that the fact that the Fed continues to be worried is something that may have investors a little bit concerned.
Well, yeah, and Vince Signorella, who you and I love to talk to,
Love
our
Vince.
Bloomberg News global macro strategist, had said to me the equity fade is because the Fed statement was dovish downgraded, and that was it was dovish downgraded the second half growth, and said that more accommodation may be needed. So, yeah, it's just a reminder that, folks, we're not in great shape.
Right. Yeah, and I have to say, I mean, Michael Cugino had some interesting insights.
I think so, too.
I did find it interesting, though, as he was saying, look, it's not that unusual to have this disconnect between the markets and Main Street, as it were. This does feel extreme, though. I have to say, it feels extreme.
Oh, you mean the run up? The run up, yeah. I agree with you. On
both ends, in many ways. And I do think part of it, and I think we have to keep reminding people of this, is part of it is that you do have a very small number of stocks. You heard Doug mention Apple. I mean, Apple is now was briefly a $2 trillion company. As I said yesterday, that's trillion with a tra. I mean, that's crazy.
Right. And I was just trying to look at what the next report for GDP is and what they're expecting. Because, I mean, it ultimately comes down to, we're looking at a decline. We're going to get this on 8/27. GDP annualized quarter over quarter down 32.5%.
Yeah.
Like get
so
your
that's
head.
Next Thursday.
Get your head around that.
Yeah. No,
okay?
It's crazy.
So, yes, we could bounce back pretty quickly, like we have in the stock market, but we have not seen that yet.
Yeah, I mean, let's point out a name, though, that is the biggest gainer. We talked about it yesterday in anticipation of their earnings, and that's Target. Clearly a big retail winner, as our story says, in this pandemic. We heard similar sentiments from Walmart yesterday, but Target, I mean, that name is up. Let's see what it ended up today. Almost 13%, 12.7%.
Up 20% this year.
Yeah, better than 20% this year. So, I mean, listen, I love Target more than most people.
I was going to just say, the Kelly family likes to walk around Target.
Yeah, absolutely. Who doesn't?
I know.
Target's great.
And I do feel like Target's one of those retail stories that they just were hitting it out of the park, then they stumbled a little bit, and then they've kind of found their way back. And they've been redoing some of their stores. I have to say, I agree with you, Jason. And they've figured out online. I've done some ordering online where I order it, get it the next day, pick it up in the store.
Yeah.
Like, that's impressive.
Yeah, no, they've done a really good job. So, NVIDIA, as you say, we are awaiting those results. That stock was down in regular trading, down as much as 1.3%. It ended up down exactly 1%. This has been a name we followed very closely, eager to catch up with Dan Morgan about this one, because this has become the dominant chip maker.
And you love chips almost as much as you love TJ Maxx.
I do. Oh, I see what you did there. You love TJ Maxx, too. You're a treasure hunter. That stock got hit today.
It's one of the biggest decliners in the S&P 500 stock. It closed at 54.36 stock. Let me just do a quick check here. Stock was down about 5.4%, and I was listening to some of our retail coverage, but basically that treasure hunt experience, which we all like to go to the store because you never quite know what you're going to find, that's been disrupted with stores closed because of the virus. Their online presence isn't like others, right? And their whole idea is you walk into a store and you just never know what you're going to get.
They say sales at open stores will drop as much as 20% in the current quarter. So that is, and that forward-looking estimate is really, I think, what people are looking more and more at is what's it going to look like, as you say, in the second half of the year. Let's take a quick look at volatility. The VIX up a touch, about 5%, closing at 22.59. It's Bloomberg. All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson.
Jinx. Dave Wilson, back with us with your stock. What's up?
Plug Power's up, Jason. It's a maker of hydrogen fuel cells and engines. The company systems are used instead of batteries for forklifts and material handling equipment. Plug Power was founded in 1997 as a joint venture of utility DTE Energy and another company, Mechanical Technology. Went public in 1999. The ticker, surprise, surprise, Plug. Plug Power shares languished for years after surging at first and then plunging. They traded for less than $1 as recently as December 2018. This started to change last year as they rose 155%. And this year, the rally has accelerated. Plug Power moved higher today after announcing fuel cell systems for robots and drones. The new products resulted from a takeover last year of a Canadian company called Energy Ore Technologies. The company said the fuel cells last longer than lithium batteries or liquid hydrogen fuel systems. Plug Power shares reached their highest price since December 2008. They were up more than 12% at one point during the day. They closed with a gain of 6.9%.
All right, interesting. Dave Wilson, thank you so much. We will check in with you tomorrow for your insights for your chart of the day and your stock of the day. Charlie Pelt's on vacation, so we're not going to hear Dancing Queen. Just
no. But, maybe someday.
Maybe someday. Probably.
All right, let's check in with World and National News headlines. Over to Ed Baxter we go in San Francisco. Hi, Ed.
Hi, Carol. The U.S. top infectious disease doc, Dr. Anthony Fauci, is calling for a unified message and guidelines from the federal government for reopening schools. Well, guys, I just lost everything here, so I'm going to throw it back to you.
All right, Ed Baxter, we have everything. We took it from you. I'm just kidding.
It happens. It happens in this environment.
Listen, we have been incredibly fortunate throughout all of this to not have a huge number of technical difficulties. We were talking about the fact we've been doing this for 6 months now. Is that kind of amazing?
Yes. You know what? And, it's funny that you say that because I was talking with one of our members of the Bloomberg community about this whole idea of,
an individual.
I'm always
talking about
like
an individual
I'm a CIA
in the Bloomberg
agent
community.
or something, right? I can't tell you what they
Was
look
it
like.
Paul Brennan?
No, it wasn't. It wasn't Paul. But it's this whole concept of time. I feel like I've been having a lot of conversations actually about concept of time. Like initially it felt a little slow and it was lagging and it was kind of weird, and then it just feels like months flew by.
Yeah.
And here we are at September. And so it's kind of crazy.
And, and I was asking somebody that I was talking to earlier about, sort of their prediction for the school year and different things that are happening. And what he said was, look, in terms of anything normal, what he said is the bid-ask spread is March to June of next year. He's like, that's really what we need to be thinking about in terms of vaccine, testing, normal life.
Right. A year from now, essentially.
A little less.
Little less.
But
a little less.
But I mean, think about the idea that like we've been through this for 6 months. Do we need to do it for another 6? Probably. This is Bloomberg. And it's interesting, when we think about what is driving the trade today, Carol, it definitely was the Fed in many ways.
Totally.
But we're also, I think, getting into this notion where we're thinking more and more about school getting back, whether it's colleges. And I have to say that conversation we had earlier in the show.
Dr. Talaj.
Dr. Talaj.
It has stayed with me. I want to put that out as an extra, or I think it'll go out.
It'll be on our
regular
podcast feed later on. But you should check it out because it reminded us that there is not a clear way forward. And
no.
And I thought he was actually very intellectually honest, but essentially saying, because we said, well, what should we do if we don't open schools? He basically was like, I don't know. I don't know what the right answer is. And I think anybody who tells you they know what the right answer is isn't telling the truth.
Well, earlier in the week, Alex and I talked about, and you must have seen this, it was about the private schools in New York and what they are doing. And the expectations among parents who are paying a lot of money for their kids to go to these private schools in New York, and as the doors reopen, what they expect out of them. But I do think what Dr. Ramon Talaj reminded us is that not everybody will have that kind of situation when their kids go back to school where they have, not only face masks, but they have, kind of complete face masks, classes being, divided into pods, like a lot of safety, a lot of filters, new filters and systems being put into place. That's not the case for all communities. We saw that with the virus firsthand. As soon as it hit, some communities, those minority communities, were hit really hard.
I think we also are underestimating because we've been, in this period where you can go outside, and in places like the Northeast, we spend all of our late fall, winter into March, April, sort of all huddled up and closed up, and anyway,
I'm thinking a lot about that as I've been outside. As soon as we can, we're outside, and that's going to change pretty quickly. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
At 17 past the hour, let's get you caught up on market action. We kind of had a bit of a reversal of fortune. Equities traded at much higher levels through much of the day. As a matter of fact, the S&P and the NASDAQ each extended yesterday's record closes. But then came the Fed minutes at around 2 p.m. Wall Street time. Policymakers downgrading their expectations for growth in the second half of the year. They also indicated more accommodation may be necessary. They saw a rebound in consumer spending, but they repeated the view that the path of the recovery is going to depend clearly on whether you get the virus contained. And then some members expressed a little bit of skepticism on the benefit-cost trade-off of adopting yield control. So we had the Dow coming in today by about 0.3%. As mentioned, S&P, NASDAQ each down from records. S&P weaker today by nearly 0.5%. And the NASDAQ comp dropping about 0.6% on the day. Momenta Pharmaceuticals, look at this, up nearly 70% on the session. Companies being acquired by Johnson & Johnson for about $6.5 billion. J&J shares were up 0.2%. Weak, though, were shares in Gilead Sciences, down nearly 5% today. The company failed to win FDA approval of an experimental drug for arthritis. In the bond market, 10-year Treasury last quoted 68 basis points, a day of dollar strength, with the Bloomberg Dollar Spot Index rising about 0.6%. I'm Doug Krisner. That's the Bloomberg Business Flash.
All right, Doug, thank you so much. Really appreciate that update. So check your calendars. 76 days until the election, and we know today is day 3 of the virtual Democratic National Convention. It's going to be a night packed with some of the party's top leaders, including former President Barack Obama. Let's get into it. Let's do a little bit look back at last night and then what's to expect this evening. Former Republican strategist, former manager of Senator John McCain's presidential campaign, and Bloomberg contributor Rick Davis, he's back with us. He's partner at Stone Court Capital. He's on the phone from Virginia. Hey, Rick, nice to have you back with us. So let's do a look back and talk to me a little bit about your take on last night, because I got to say, safe to say for many, and maybe even most, the roll call really resonated with folks. I watched it, and I got to say, I got a little emotional watching it.
Yeah, it was really something special. Having run some of these conventions for the Republican Party in the past, I used to hate the roll call. I mean, all these crazy people would stand up with funny hats and brag about their state, and it was like, can't we get this over with quick? And I must admit, I thought the electronic version from their home states, the people seemed to shine. The storytelling was terrific. It really was one of the new things with this virtual convention that really was much better than the old conventions. And so I suspect that's going to stick around now for the rest of the future history of these conventions. But it really was one of the highlights. Of course, Joe Biden was the other big highlight last night. I think it was the first chance she's really had to talk to the American people about her own experiences, especially in education, COVID, and her husband and her family. And I thought it was just fantastic. It was very down to earth, empathetic, and I think she really connected with the audience.
So let's talk a little bit about tonight, Rick, because this stands to be, last night was memorable in many ways. The night before was memorable, I think, largely because of former First Lady Michelle Obama. I mean, tonight, talk about star-studded. You have former President Obama, as Carol mentioned. You have former nominee and former First Lady, former U.S. Senator, former Secretary of State Hillary Clinton. You have House Speaker Nancy Pelosi, Elizabeth Warren, and not the least of which, you've got the vice presidential nominee. Let's talk about Kamala Harris, if we can, and what she needs to deliver.
Yeah, I'm glad you're going there, because I think with all these stars on tonight's program, it's important to remember that this is the night the vice president gets introduced to the American public. And even though she's been in public life, this is going to give her more exposure than anything she's done up until this point in time. So it's an opportunity for her to give a first impression in many ways. As a prosecutor in her former lifetime, I have no doubt she will use this opportunity to go after Donald Trump and his administration. There's no doubt that vice presidential candidates tend to take some of the responsibility in a campaign for going after the opponent, and I doubt if that's going to change tonight. She'll also attest to Biden's leadership. This has been the theme of the entire convention. They want to make that a decision point in the election, and so I think she'll talk about that. And I think she, like Michelle Obama, as you mentioned, another big star in the first night, I think she will appeal to the voters who support Biden to be sure to cast their vote. And I think that that's one of the themes that is very strong. As you mentioned, Hillary Clinton's on the program tonight, and she didn't get the turnout that Barack Obama got in 2012. And so if she had, she'd probably be there running for her second term. So these are important issues for this ticket, and Kamala will be under some pressure tonight to do a boffo job to make these points.
Can I just go back, though, to the roll call? Because I thought what was striking. No, I know, I'll move on eventually. But, the delegates love Bernie Sanders, too. And I do think about how does Biden successfully appease the moderates and the leftists of the party?
Well, I think they've all found a common enemy, right? I mean, I think that Donald Trump has unified the Democratic Party in a way that I have not seen for quite some time. Typically, you would have outbursts all during the convention from the left to try and push the party toward the issues that they care about most. And consistently, whether it was Bernie Sanders the first night, who really toed the party line, to AOC last night, who, even though she was putting Bernie Sanders' name in the nomination, no exercise of free will on points that she would have liked to have seen discussed. And then even tonight, Elizabeth Warren will be one to watch. Again, another star on tonight's program. She'll be the progressive left side of the party's voice tonight, and it'll be interesting to see how she handles it.
30 seconds, Rick. One notable thing from last night as well, very familiar to you, Cindy McCain. I mean, her presence and obviously the presence of the late John McCain was so interesting.
Yeah, this is something that the Biden campaign and the senator reached out to Cindy to see if she would narrate this. They were going to do a video anyway that was all about the relationship that they had, that Joe Biden had with John McCain. And I thought they really portrayed it beautifully, and I was very proud of Cindy to get into the video with her own narration. I think it was something we all need to be reminded of, that regardless of politics, regardless of whose party you're in, you're all Americans, and
right.
You should all think about working together.
That's what the roll call, it was just all about being an American, and that's what the vote is ultimately about. All right, everybody, let's not forget that for you, or those of you listening in New York and San Francisco watching on YouTube, we're going to continue. Otherwise, in D.C., check out Sound On with Kevin Cirilli.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You were dancing with Alice this morning, huh?
I was.
I could tell.
Oh, yeah. No. It's, listen, it's being in the frozen room that just, gets me going.
I do feel comforted by seeing the frozen stickers
by seeing
again.
Anna and Elsa, yes, it's all happening. Coming up, we're going to check in with our buddy Dan Morgan, talk NVIDIA.
Yeah.
That is one of the most influential tech names out there, so eager to get his take on that, as well as talk a little Apple, $2 trillion.
Yeah, pretty crazy, right? And NVIDIA, they are out with their results, and we are seeing the stock bounce around in the after hours. Right now, it's down just a touch. All right, let's get back to your top business story. Some of that news after the close. Here is Doug Krisner.
Yeah, NVIDIA shares in the regular session, Carol, were down about 1%. You guys can unpack the latest momentarily. Generally speaking, it was a day that really was centered on these Fed minutes. Now, policymakers downgraded the growth estimates for the second half of the year. They also indicated more accommodation is necessary. They were able to note a rebound in consumer spending, but they repeated this view that, the path of the recovery is really going to depend on containment of the virus. And here's a subtlety. They backed off from what seemed like earlier a readiness to clarify kind of the forward guidance issue. They seemed to back away from that a little bit, and there was a fair amount of skepticism when you look at the kind of the cost benefit of adopting yield curve targeting. That said, we have the Dow falling about 0.3% on the day. S&P and the Nasdaq each off from records, with the S&P falling about 0.5%. Nasdaq comp down 0.6%. Momenta Pharmaceuticals stock rallies nearly 70% today. 70%. Companies being acquired by Johnson & Johnson for about $6.5 billion. Gilead came in by nearly 5%. The company failed to win FDA approval on that experimental arthritis drug. And you were right. At one point, Apple stock was up more than 1% today, a record high, and it gave the company a $2 trillion market cap. But technically, we weakened. We ended higher only by 0.1%. And I'm looking at the Bloomberg terminal. You run the DES function. So we've got a market cap of only about 1.99 trillion as far as Apple is concerned. I'm Doug Krisner. That's your Bloomberg Business Flash.
Only 1.99 trillion, man. But I wouldn't give.
Tomorrow's another day.
Extra. Exactly. All right, so let's talk about that and much more. So much happening in the world of tech. Our go-to guy down in the ATL, Dan Morgan, Vice President and Senior Portfolio Manager for Synovus Trust Company. He joins us on the phone from that fair city. All right, Dan, let's jump right into NVIDIA. What'd you make of the numbers? This is an increasingly important name.
Hi, Jason. Hi, Carol.
Hey.
Across the board, it looked like a very strong number. I mean, obviously, the headline news in terms of EPS and revenues, again, were above estimates, $3.87 billion. They even came out and said on their upcoming quarter, which is their third quarter, they're going to do $4.4 billion, plus or minus 2%, which is above the consensus estimate, which was at $3.9 billion. So not only did they beat in terms of EPS and also revenues on the second quarter, but they guided strong in the third quarter. And then, Jason, I know you're an old chip guy, so you love to dig through the minutia of these different segments.
Hey, just because I'm a young chip girl doesn't mean I'm not interested. I like to dig into these reports.
I think the term she was looking for, Dan, was chip chick.
Chip chick.
Chip
Ooh,
check.
nice.
I like that. Okay, so we got a chip check and an old chip guy.
Exactly.
But anyway, data center, $1.75 billion. I had $1.72 billion, so that was above 167% year-over-year increase. And then gaming, $1.65 billion versus $1.4 billion. And guys, what's so critical about these numbers, and we can all clap, is this is the first quarter that NVIDIA has actually reported higher data center revenues than gaming. So now
that's really
when we talk about it, we have to say it's a data center chip company, not a gaming company. Jason?
That's really important.
Well, for those who aren't chip chicks or old chip guys,
right?
Why is that so important, Dan?
Well, I mean, we think about NVIDIA, and Jason can remember. It used to just be, they had the GPUs, and they would, they were the top player in the gaming space. So we would look at what was the new games that were coming out, and was NVIDIA, chips in those games, and it was going to really take off. And the data center area is so exciting, right? I mean, last year overall revenues grew about 37% in the data center group. And for our listeners out there, that data center, what does that mean? Well, that's infrastructure as a service, right? AWS, Amazon, Azure with Microsoft.
I'm placing a new order to sell short euro at 118.385. 118.385. Okay, order placed.
Stock, and just a quick headline. Airbnb confidentially submitting its draft for its IPO registration. We were expecting this. We've been talking a lot about this over the past week. So there it is. Dan, do you buy NVIDIA with it up 106% this year, or you just be like, okay, I own it. I'm happy with this report. Move on.
Well, you're right, Carol. It is the #1 stock in the overall technology sector in terms of performance year to date. AMD is #2. Apple is like #5. So you're right. It's made a huge run. And, NVIDIA, that's always been the struggle, right, Carol?
Yeah.
It's been that multiple. I mean, it trades at about 53 times this year's estimate. AMD is about 47 times. Intel at about 10 times. And, as Jason knows, traditionally semiconductor stocks trade at low multiples, right? Because it's such a cyclical industry. So that's the big struggle, right? How do you get your arms around the multiple going forward for NVIDIA? But I have to say, I mean, they're growing at a very fast pace. I mean, revenues were up over 50%. So you could make a case that you could substantiate that multiple based on the growth.
All right, so 1 minute left. Help us get our arms around a $2 trillion market cap that we touched today on Apple. That is, as Carol Master would say, a WOA number.
Jason, huge number. I remember doing stories back in 2018 when we hit $1 trillion, right?
Yeah.
It's only been a couple of years and we doubled again. So I think what this is, just an overflow from that huge blowout third quarter that we had in regards to all the trends were in place for them. You had the big work from home trend really boosting kind of more mature, products like iPad and Macs. And then, of course, you had success in that quarter in terms of iPhone revenues actually didn't go down as much as everybody anticipated. And to be honest with you guys, Apple's all about, and we've talked about it before, the release of the new 5G phone, which we're expecting this holiday quarter, and everything that can come from that in terms of upgrades and adding new customers to their service platform. So everything seems to be executing right now for Apple as we kind of go into this holiday quarter, and we're probably going to hit $2 trillion by the end of the week.
Jeez.
Absolutely. All right, Dan Morgan, thank you so much. Always love your instant analysis. Just as the numbers were crossing, you were digesting them and sharing it with us. Really appreciate it. Dan Morgan, our pal down in Atlanta with Synovus Trust Company, and he's been looking at tech for a long time, as he alluded to. He and I have been talking for literally decades now about
Is he like
chips.
a chip senior? What do we call him?
Exactly. He's a fellow old chip guy, just like me. Ian King somewhere is rolling his eyes. I can guarantee you that. All right. Speaking of Ian King, San Francisco is where he is. That's also where we find Ed Baxter. Hey, Ed.
All right. Hey, Jason. Top infectious disease doc in the U.S., Dr. Anthony Fauci, is calling for a unified message and guideline from the federal government for reopening schools and universities.
I would like to see a consistent message about schooling, consistent to guide the local authorities who make the decisions about school.
And he says there are institutions that are prepared and left dorms, for example, empty in case there's a breakout, but he says right now policy is not there. California fighting the trifecta of major problems today, along with COVID-19, fire, and energy. Governor Gavin Newsom says firefighting help is coming in from 3 other states. He says there are 367 reported fires in the state now, and then there are the complex of fires.
And so 23 major fires that we are currently addressing aggressively through all our efforts, both the local, regional, and state and federal level.
And he says this, along with another record day of heat, potential of rolling blackouts. He says Californians need to continue to fight against the projected demand deficit.
284 megawatts.
The order to sell short euro removed. It moved rapidly down. Wait for another time.
To do.
He says a fight through today and tomorrow should be cooler. President Donald Trump's chief of staff, Mark Meadows, has thrown Postmaster General Louis DeJoy under the bus.
Actually, the Postmaster General did that on his own.
He says he doesn't know how many boxes have been pulled or systems slowed. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed, thank you so much. Well, as we look ahead to our conversation coming up at the top of the next hour with President Morehouse College, one of the big questions around students going back to college is, where are they going to live? Are they going to stay? Are they going to go to class? I mean, I have heard, as I'm guessing you have, Carol, a lot of anecdotal evidence that a lot of kids, the kids who can, are basically saying, get me out of my parents' house, even if I'm not going to class.
Right.
In a classroom, I want to live in my own space. If it's an off-campus apartment, if it's a dorm, whatever it is, I want to go to something resembling college for the love of God.
I think I have a niece who's doing that. She's like, Mom and Dad, I've loved being home with you, but I've got an apartment I'm going to go to, even if I'm going to be online.
Great. This has been great, and I appreciate all the laundry and the food and the shelter. But I'm going to go back to school, even if going back to school doesn't mean going to class. But there is this question because of these economies and these ecosystems that build up around colleges, whether student housing is actually a good investment.
Well, and there's a great story on the Bloomberg that talks about two analysts defending American campus communities, which is, a real estate play that plays specifically into colleges and universities. It provides housing, off-campus housing for students at colleges and universities. And I guess the American campus communities, their shares fell today. Especially as we continue to get, various headlines about various schools that have opened and then they're closing. But basically, the analysts are coming out and say that American campus might benefit as universities look to off-campus housing to de-densify and update old-fashioned dormitories. I love that, de-densify. But think about
De-densify is
that.
a word we're going to be using a lot, I feel like.
T-shirt list? It goes on the T-shirt list.
De-densify. Yeah, de-densify your life. That is, that's something for sure. Yeah, and we've talked to owners of off-campus housing and on-campus housing about exactly this. I mean, you're seeing, I believe NYU is using some local hotels in New York City. So the housing crunch, it's a whole different beast when it comes to the pandemic. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So the equity market moved lower today, and we had the S&P and the NASDAQ each dropping from record highs. The S&P by about 0.5%, and the NASDAQ comp by nearly 0.6%. The Dow was weaker by 0.3. So we had the Fed minutes. They were dovish, yes, but when you hear about a downgrade of second half growth and the repeated view that the recovery is going to depend on containment of the virus, some skepticism about yield curve control, and then subtly the kind of retreating from this early readiness to clarify guidance. This issue of forward guidance, it looks like they backed away from that a little bit today. So everything kind of taking in summary kind of moves the market lower. We have NVIDIA shares right now in late trading moving down. The company was out after the bell with earnings that were above estimates. So too was the revenue figure. And then NVIDIA gave a strong sales forecast given rising demand for some of its semiconductors that are used in data center operations. Nonetheless, NVIDIA right now in late trading weaker by just about 0.7%. Target shares today rallied. The results for the last quarter were far above what the market had been looking for. In terms of one of the standout performers to the upside, Momenta Pharmaceuticals. Stock jumps nearly 70%. Company's being acquired by Johnson & Johnson for about $6.5 billion. Shares in J&J today were up about 0.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Appreciate that. Well, there are many questions about the long-term impact of COVID-19 on real estate, how it will be used. We've seen the debate between cities versus suburbia, people moving out of cities, and the virus and, its impact on really our communities, and also, again, reminding us of all the inequalities, and that also plays into affordable housing. So with us, someone who has watched the real estate market for 4 decades, Jorge Perez is chairman, founder, and CEO of the Related Group. They've got a portfolio of more than, I think, $40 billion, largely in South Florida, but also in Mexico, Brazil, Argentina, other places, luxury branded properties, but also, as we mentioned, affordable housing. He joins us on the phone from Miami. Jorge, nice to have you here on Bloomberg Radio. How are you? How is South Florida and Miami, and of course dealing with the impact of the virus?
Well, right now it's pouring rain, so
not so
I'm
great.
locked up not only because of the virus, but because of the downpour that we're getting right now. But as you know, we have not reacted well in Miami to the virus. It's been a bit of the epicenter of new cases. We've opened up and then had to close back up the interior of restaurants, and it's been not an easy ride here. Unfortunately, we're not so good here at following instructions. I'm very surprised that I still go out for a walk, and almost half the people are not wearing masks in the street. So we need to do a much better job at following directions and keeping safe. Other than that, Miami has been helped in a way by the movement of people from the Northeast towards Miami. We had been seeing that previously to the pandemic, due to the high taxes in places like New York. I think this has accelerated. Our single-family luxury home has been doing extremely well. A lot of buyers looking to move. Carl Icahn and other Wall Street people have made the announcement that they're moving permanently down to Miami from New York and other areas. So in that respect, I think we are the beneficiaries. The open air, the sea, the ocean. I just came from a house that we have in Aspen, and Aspen is even that on steroids. Everybody wants to now own a house in places that they see as being less congested, less prone to catching the virus.
Yeah, it is pretty amazing. So when you think about, you're in entire portfolio and also things that are in development and under construction, Jorge, how has that part of it gone in terms of your ability to sort of keep going with your business?
Well, it's been a radical change. You know, we had to very rapidly figure out how do we work efficiently first from home, and then how do we make our office safe for employees to return and work there. You know, we reacted very rapidly to that. You know, Zoom has become, you know, the new trend. We communicate every day. We've set up a WhatsApp system and a text system, so all the key executives and their groups are constantly in communication. So our technology has improved tremendously because of the virus. I think this is something that we are going to see into the future. You know, we have become much better, much more efficient at working from home, at communicating without being face-to-face. But it's been a real change in the way we communicate. We talk to people. We execute orders. Fortunately for us, we are in the multifamily business, which is probably the sector that has been least affected by the virus. Retail, as you know, and hotels, convention places, restaurants have all been affected to a much greater extent than we have. Our collections have, in these months, been all over 90%, which is, you know, above the national average. So, you know, we have been relatively lucky as a company in that we've adapted rapidly. We dropped a lot of the urban jobs, all the retail jobs. We moved to suburban locations rapidly in our development, and I think for the next at least year, that is going to be the preferred housing type. You know, people are afraid of being in close environments. So I think we can see it. Our high rises have taken a much greater hit than our suburban products. And it's been a shift, you know, and we are used to, you know, Florida. I always think of Florida as a roller coaster. So we're used to up and down and up and down, and moving very rapidly to adapt to change.
Do you think that lasts, Jorge? Like, this is the thing. Like, everybody's like, all right, the demise of big cities. Everybody's going to leave New York and elsewhere. Does it list, or is this temporary in your view? I mean, if people are buying properties, that's not something you just do and you change next year. But I'm curious. You understand this market better than most.
Yeah, look, we again, like I said, we're used to the ups and downs. You know, Miami goes through periods in which we open up a condominium and there's people lining up 10 blocks, you know, to try to get it, and then there's some other years in which we can't sell a unit, right? I think the demise of cities is not here. I think people have short memories. I think we will succeed in defeating the pandemic. When the vaccine is going to be available, I don't know. You know, I've been, you know, having a lot of conversations surrounding this with medical people from Washington and other places. So United States, you know, Oxford and England and Israel are probably the closest to a vaccine. I think a vaccine comes up sometime in October and gets mass produced by the beginning of the year.
Right.
And I think we go back to what I would call a new normal. People will still be going to cities. People still don't want to drive 2 hours to work.
Right.
Right.
Jorge, we have to jump in. Please come back, and we will give you more time because it's just fascinating to get your perspective on the real estate market. Really love that conversation. Jorge Perez, Chairman, Founder, and CEO of the Related Group, joining us on the phone from Miami. If you missed any of it, be sure to check out our podcast later on because great snippets there. This is Bloomberg Radio.
From Bloomberg World Headquarters in New York, I'm Doug Krisner. 5 p.m. on Wall Street. We had some weakness in the equity market today. We'll talk more about that in a moment. I'm tracking shares of NVIDIA right now in the late U.S. session. The stock is down about 0.4%. Curious a bit because the company gave a very strong sales forecast given expectations for a pickup in demand for the chips that NVIDIA makes for the data center market. Now, NVIDIA is the biggest maker of semiconductors for video games that run on basically data centers to help them run as realistically as possible. The company has also carved out a new multi-billion-dollar business selling chips to speed up artificial intelligence software. And again, NVIDIA right now in late trading weaker by about 0.5%. We were weaker in the overall equity market in the regular session. A lot of this had to do with the minutes from the last Fed meeting. Policymakers downgraded their expectations for growth in the second half of the year. They repeated the view that the path of the recovery essentially is going to depend on containment of the virus. Minutes also indicate a little bit of skepticism about the cost benefits of adopting a yield curve targeting, and more subtly, they seem to back away from earlier readiness to clarify guidance on the future path of interest rates, that so-called forward guidance issue. So we have the Dow today weaker by 0.3%, S&P down 0.5%, NASDAQ comp coming in by 0.6%. Not a lot of movement in the bond market today. 10-year Treasury last quoted at 68 basis points, but it was a big up day for the dollar. We were stronger against the majors. Bloomberg Dollar Spot Index rising 0.6%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. Jason Kelly, Carol Masser, Jason. Education, we talk so much about it, rightfully so.
We talk so much about it, and one of the hardest working reporters always, but certainly right now, is Janet Lauren, trying to keep in touch and trying to keep track of everything that's going on in higher education. This week alone, there have been numerous stories. Janet joins us on the phone. So, Janet, before we get to the president of Morehouse, who we're going to bring on in just a second, give us 30 seconds on state of higher education right now.
Well, a lot of schools have sent kids home because of higher test rates of coronavirus. We saw on earlier this week, the University of North Carolina said students should go home because a lot of kids were testing positive. Yesterday, Notre Dame had 80 students test positive in one day, and they decided to pause classes, pause in-person activity for 2 weeks and see what happens. And Michigan State yesterday said that they would not be having on-campus program.
Right.
Yeah, that's our backdrop. Let's bring in David Thomas. He's president of Morehouse College. He joins us on the phone from Atlanta on this Wednesday, along, of course, as you just heard, with Janet Lauren, our higher education finance reporter. President Thomas, so nice to have you here with us. You know, there's a lot on the plate of our country's colleges and universities. The virus, reopening, virtual learning, the cost of education, inequalities. What's top of mind for you right now?
Well, top of mind for me is one, making sure that the quality of what we offer online this semester far exceeds what we were able to do last semester, and that we're also able to create community in this virtual environment, because that's one of the things that draws students to Morehouse College. And so we've required all of our faculty who are going to teach this semester to be certified in online education, because one of the things we learned is that there's a difference between online education and remote instruction. Remote instruction is where you essentially do what you do in an in-person classroom. You're just being taped or delivering it on Zoom or some other video platform. Whereas online education, there's actually a pedagogy to it that makes it much more dynamic. So we've invested in that. And the other thing that, you know, keeps me awake at night is, you know, whether or not we'll be able to bring our students back for the spring semester. given what we're seeing happen with the virus, in particular in the state of Georgia, where our positivity rates, testing rates, are in double digits right now.
Well, you made the decision quite early on among colleges that you could not do in person because there was too much risk for everybody, not only the students, but also the other people working on campus. Now, other schools are seeing their decisions may not have been such a great idea to invite students onto campus, and they're having to pivot at a very late date when kids are already there. Can you talk about what went into your decision to be virtual very early?
It was very very straightforward. We very early on decided that the number one priority for us would be keeping our students and our staff and faculty safe from a health and wellness perspective. And then our second priority was ensuring the quality of what we could provide educationally. And the third priority was, what's going to be the financial impact, because we have to stay viable financially. And being clear about that made it pretty straightforward for us to move, through our decision tree and to wind up being among the first schools to say that we would be fully remote, especially in the context of Georgia,
right,
where we also faced, a very confusing political environment where literally at one point we had the governor suing the mayor over whether masks could be mandated in the city of Atlanta, because the governor was not going to allow that to happen in the state of Georgia. And we were going to mandate masks on our campus. And it's hard to enforce a rule, when students might raise the question, well, that's not legal in the state. If the mayor can't do it, how can the college do it?
Right.
So that just led us, on a decision tree. And when we saw the rate of positive tests going up, that led us to reverse our earlier decision, which was that we would be in a low-density hybrid format. But it was, in many ways, it was pretty straightforward because we just got very clear about, what our priorities were and our principles.
Right. And so President Thomas... Go ahead.
Yep. No, I was going to say, you may also know that we were the first school, first scholarship granting school to cancel fall football in the country. And we did that almost 3 months ago, and we're using the same set of principles.
Yeah, so, all right, we're going to continue our conversation with David Thomas. He's the president of Morehouse College. We're going to talk a little bit about some of the financial underpinnings that he alluded to, because that is clearly on the minds of so many college presidents. Also want to talk a little bit about, and he's alluded to this as well, what's going on there in Atlanta and in Georgia, not just when it comes to the virus, but when it comes to some of the big issues of racial injustice that has been obviously, given Atlanta's history, and as a former Atlantan, I know this well, sort of what's been going on there has led the way for many of the conversations that are happening across the country, not the least of which with the passing recently of John Lewis. Carol?
Yeah, Jason, I feel like at the crossroads of so much, and you talk about John Lewis, I just think about, the the DNC, their roll call last night, right? Kicking it off,
On the Edmund Pettus Bridge.
I mean,
unbelievable.
So much has happened this year, and so much is at stake come that 2020 election in November. So I agree that President Thomas is at the crossroads of so much. So we have a lot more to get to. He's going to come back. So too is our Bloomberg News higher education finance reporter, Janet Lauren, who is a must-read when it comes to everything that's going on with colleges and universities right now. First up, though, back to World and National News headlines and a check-in once again with Ed Baxter. Hi, Ed.
Yeah, hi, guys. And I'm sure that you heard, too, the report that I had with Anthony Fauci saying that what we need is federal guidelines for everybody would make it easier. Excuse me. So tonight, Kamala Harris night at the Democratic Convention. Also on the star-studded card is Barack Obama, Elizabeth Warren, Hillary Clinton. Bloomberg political contributor Rick Davis says, look for Harris to be the attack dog.
As a prosecutor in her former lifetime, I have no doubt she will use this opportunity to go after Donald Trump and his administration.
Rick saying, along with the attack, she must now show her admiration for Joe Biden, try to assure with moderate and progressive sections that she would fight for them as well. White House is now saying the president will judge the fairness of the election overall after the vote. Spokeswoman Kayleigh McEnany not saying what the president would do if he thought it was unfair. California, major problem to fight. The governor says all three. Smoke filling the air as the state fights at least 367 wildfires. Governor Gavin Newsom says crews are coming in from 3 states as long as a budget increases for fighting. He says the fight will be won.
We're able to increase our budget for CAL FIRE by $85.6 million to get and bring on permanent, full-time firefighting force.
And then there is energy, the possibility of rolling blackouts continuing today.
Today, we believe, will be another challenging day, but we're up to the task. You're up to the task. You've proven that on Sunday night. You proved that on Monday. You proved that on Tuesday, last night. But we are looking at upwards of 47,000 plus.
And he says that it's true that if Californians fight through the day, we won't be shut down tonight. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you so much. You are listening to Bloomberg Business Week. Well, we love talking deals. We love talking fitness here on this program. We also love reading up on the scoops by Jillian Tan. I think you had her on while I was on vacation, Carol. She is just an absolute scoop machine. Love what she does around, especially, and she and I have a shared interest in private equity and fitness. And here we are, Sweaty Betty. Have you heard of this?
Yes, actually, and they have some pretty cool products.
It checks out.
And I think they had a store, I want to say on Madison Avenue. I actually don't own anything, but really kind of cool take, and yet they're having a hard time.
Well, what's interesting is...
Or is it, right? They are.
I don't think they're having a hard time.
Are they just looking to sell?
Much they're going to be sold. I mean, they're private equity owned. Elle Catterton, a well-known name in the fitness world. Actually, they were an early backer way back in the day of Peloton. They own... I'm sorry, I'm getting confused. Early backer of...
You're still kind of on vacation. Want to try that again?
Let me start again. They were an early backer of Peloton.
Yes.
The other notable thing about them, also relevant to something you did last week, is they are a backer of Roan. And you caught up with Nate Checkett, I believe, while I was on vacation.
Yes, we had a great chat.
So this is basically Sweaty Betty. I'm finding my footing here. Sweaty Betty is basically the female equivalent of Roan in many ways. It's sort of workout gear.
It's very cool stuff.
It's high end. It's for a very affluent audience.
And it's actually been something, I guess, that has been fairly resilient despite the downturn. And, you know, I kid, right now I'm in jeans, but it's either jeans or kind of yoga pants.
Yeah, totally.
And Jason Kelly's wearing a lot of Lycra lately, apparently.
So much. No, I am not wearing Lycra. Jeans and T-shirts, jeans and Aviator Nation. That is
come on,
basically
Jason.
every
It's
day.
just between you and me. You can share with me.
I can share.
My name is Jason Kelly, and I wear a lot of Lycra.
I wear a lot of Lycra here in Studio Alice. But in any case, Sweaty Betty, keep an eye on that one because, like Lululemon, as you alluded to, these affluent fitness brands, they've actually done really well in this pandemic because of the whole athleisure movement. We're all working from home, and, you know, a lot of Lycra. This is Bloomberg.
You got through it, Kelly.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So the equity market drifted lower today. We ended down, if you look at the Dow, by about 0.3%. In the broader and secondary market, we are off from record highs, with the S&P dropping nearly 0.5%, and the NASDAQ comp coming in by about 0.6%. We heard from NVIDIA after the bell, a strong sales forecast given rising demand for chips for those data centers. Stock is very little changed right now, drifting down about nearly 0.2% in a late U.S. session. One of the market drivers during the regular session, the minutes from the last Fed meeting, policymakers downgraded their growth estimates for the second half of the year. They indicated more accommodation may be necessary, and they repeated the view that the path of the recovery essentially is going to depend on the path of the virus. Minutes also indicating a fair amount of skepticism about the cost-benefit of adopting yield targeting, and perhaps more subtly, they seem to back off from an earlier readiness to clarify guidance on the future path of interest rates. One of the standout performers today in the regular session, Target. Stock is up more than 12% after sales topped estimates, well above estimates. In the minus column, though, Gilead Sciences drifts down by nearly 5%. That was after the company failed to win FDA approval for its experimental arthritis drug. In the bond market, 10-year Treasury last quoted in New York at a yield of 68 basis points, and stronger dollar today with the Bloomberg Dollar Spot Index rising 0.6%. I'm Doug Krisner. That's the Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Massar, also joined by Janet Lauren, our Endowment Higher Education Finance reporter. We're speaking with David Thomas. He is the president of Morehouse College. He joins us from Atlanta. And so, President Thomas, I have to ask you, pivoting a little bit away from your day-to-day job, figuring out the mechanics of this university, you have studied organizational behavior. You have taught this over the years. You were the dean of a fantastic business school, my alma mater, Georgetown University. Before you came to this job, I do wonder, in your job, especially in Atlanta, especially at this incredibly prestigious, historically black college, what is your take on what we have seen around racial justice, racial unrest, but also, more importantly, the move toward really starting to talk in a serious way about diversity in corporate America? What have you seen? What have you observed of late?
Yeah, so it's I don't quite know what the word is, but what we've seen is the confluence of two pandemics. The first is the COVID pandemic, and the second is the pandemic of institutionalized racism in our institutions and organizations. And, if we look at COVID, it's revealed just stark inequities in health outcomes along lines of race. And then if we look at the pandemic of institutionalized racism, what it brings our attention to is the fact that there are still policies and practices that give license to the conscious and unconscious biases that devalue black lives and brown lives in our country. And it's very interesting to me that these two viruses had to come together and so powerfully paint that picture. The other side of it is that in ways that I've not heard in my almost 40 years as an academic studying at the intersection of organizational change, leadership, and race, so many leaders now willing to use the words institutional racism, systemic racism, that it's, not just about changing people's attitudes so they the underpinnings of our social systems, whether it's for-profit corporations or educational institutions or the police force. And that really gives me some hope that, we will see that this isn't just a moment, it's actually a movement to really move us toward the ideals that underpin the American idea. So in that sense, I'm hopeful. Morehouse has been particularly impacted because we are the only historically black college committed to the education of men, and black men have very much been part of, the picture of what institutionalized racism looks like because of George Floyd. That's not to deny that there's also black and brown women who've been affected, like Breonna Taylor, but we've really been at the fulcrum. Here in Atlanta, I had a student who was tased, pulled from his car, had done nothing wrong other than talk to someone from his car that the police didn't want him to talk to. And, we had to spend time helping to get him released, his record expunged. And I've had other students arrested, so I've had to deal with things on that end of the continuum. And on the other end, we've had a number of people reach out who want to partner with Morehouse College because they really want to take this moment seriously and make a difference. And that's been in the realm of philanthropy, as well as creating opportunities for our students and partnerships to advance other aspects of the college. So it's, it's really captured a lot about the complexity of race and social justice in our society, both the best of it and the worst of it.
Before we go, Janet, I know you want to ask one more question.
Yes, if we could just talk a little bit about football. Again, you were very early on in saying this was not a good thing for your community, for the health of your athletes. And can you talk about, again, that decision? It is manifested in divisions, in athletic divisions. Some have said we can't do this. The SEC in the South, where you are, is continuing. And again, talk what went into that decision and the concern about the health of your athletes.
Yeah, when I looked at it, one of my principles was I would not place any segment of my student population at more risk than any other segment. We looked at football, and we just couldn't justify the idea. And at that time, we thought we might be able to come back in a low-density residential format. But it just became clear that our football players would be at greater risk than our other students. And we coupled that with the fact that the black community has been disproportionately impacted. So the likelihood that, we would have positive cases on our campus was fairly high. Our student athletes would travel to other schools. We had designed a very rigorous protocol to keep our students safe, but we couldn't guarantee that all the schools that they would visit to play at would have similarly rigorous protocols, because it's very expensive, to test every player every week or twice a week. And we also started with the assumption that our athletes are students first. We admit them to Morehouse College with the expectation that they're going to graduate from Morehouse College in 4 years, not that they're going to play football for 3 years and go pro. And we just ask ourselves, what do we owe our students? And we say we owe them safety, and we owe them an education. So the other thing that we did, and if you read our announcements, in the first paragraph, we make very clear that we will guarantee every student athlete their scholarship because we brought you here to graduate from Morehouse. And the fact that you're a great football player is a dimension of merit, but it's not what determined whether you got into Morehouse College. And so I'll be quite honest with you. I made the announcement I made the decision without talking to another president in Division I or Division II.
Wow.
And made the decision, announced it. We put out a public announcement, woke up the next day to a plethora of, calls and emails. And it was only in the first interview I did that I realized we were the first school to actually cancel football, at least scholarshiping school. And I was actually shocked.
Yeah. Well, you've had a lot of good company since then. Listen, we could talk to you for the rest of the day and well into the evening.
Come back.
You're going to have to come back and spend more time with us. Thank you so much, David Thomas, president of Morehouse College, such a thoughtful guy, and
Wish him
his
well.
experience teaching at Harvard, and as I said, as the dean of the business school at Georgetown, the McDonough School, at a time of unbelievable growth, and where he is now, a really important role. And we remember also Robert Smith, of course, that huge move, basically taking on all of the student debt there at Morehouse. That stemmed from a conversation over dinner with David Thomas when that all happened. Our thanks as well to Janet Lauren, our education and higher education and finance reporter. All right, let's get to Doug Krisner, if we can, for an update on the news. Hey, Doug.
Hey, Jason, we're expecting a briefing to get underway momentarily from President Trump. We know that the administration sees the possibility for Republicans and Democrats to agree on a smaller round of pandemic relief. We are told the number is around $500 billion. And we are also told it would omit some of the biggest areas of disagreement. So we're going to be keeping a close ear on that and whether there's something to report out. Meantime, Dow Jones was reporting earlier today, trade negotiators from both the U.S. and China are planning a video meeting in the coming days. So we'll see if the president addresses the issue of U.S.-China relations. After the bell, NVIDIA gave a strong forecast for sales, rising demand for those chips for data centers. Even so, the stock is down more than 1.5% in late trading. It was a down day for the equity market. The Dow comes in by 0.3%. S&P 500 weaker by nearly 0.5%. And the NASDAQ composite off from a record high as well by about 0.6%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening to Bloomberg Business Week. We are awaiting some comments from the president, President Trump, at the White House, as he often does during this hour of the day, Carol.
Yes.
And I think
well,
not
they went
surprisingly,
away and then they came back.
Yeah, well, and obviously, I think it is not necessarily a coincidence that this is a week of the Democratic National Convention. Next week, it will be.
But we
the
haven't had them
Republican
all
starts.
week, because he's been out traveling, giving.
That's right.
Right, so it's been kind of sporadic this week.
Yeah, absolutely.
But you're not surprised that he's back today.
No,
Is that
not
what you're
surprised.
saying?
Not surprised. Not totally surprised. And he made some comments earlier that stirred some people up around Whirlpool, or I'm sorry, not Whirlpool, Goodyear. Excuse me.
Right,
out in
that's
Akron,
right.
Ohio.
Saw that.
Reacting there.
All right, so much going on. We're waiting for the president. We'll take you there when he begins talking. But let's not forget, we've got the DNC going on. It's another night of big speakers. And our next guest predicted President Trump, or then candidate Donald Trump, would win the White House back in 2016. Truth be told, his record for calling U.S. presidential elections goes back much further than that. Alan Lichtman is with us, distinguished professor of history at American University, author of The Keys to the White House, and he joins us on the phone on this Wednesday. Professor Lichtman, so nice to have you here, and I believe you're in Washington, D.C. as we speak. You have been very popular, and I have to say, I heard a podcast, and I'm like, I want to talk to him.
Get me
and
that
Jason and
guy.
we were like, all in, all in. Talk to us about your model. It's 13 keys to getting to the White House. How does it work? What do you look at?
Yeah. The fundamental insight behind the Keys model is that elections are essentially votes up or down on the strength and performance of the party holding the White House. That's what the 13 keys gauge. So forget the polls, forget the pundits, forget who's up and down on a daily basis. Don't worry about the ads, the speeches, the debates, the tricks of the campaign. Keep your eye on the big picture. And that's what the keys look at, the big picture of incumbent strength and performance. Things like midterm election results, third parties, long and short-term economy, scandals, social unrest, policy change, foreign policy successes and failures. And the way it works, it's 6 or more of the keys. Any 6 or more, it's nonlinear, go against the party holding the White House. They are predicted losers. Fewer than 6, they are predicted winners.
All right, so take us back to, before we get to this current election that we're experiencing, take us back briefly to 2016. What was it that ultimately tipped it to candidate Trump?
Yeah, that was probably the most difficult and closest call I've ever made. In my Washington Post interview where I predicted Trump's win, I said the keys very, very narrowly point to Trump. And, you know, I hate to say it, but Bernie Sanders, one of the keys, and this was exactly a 6-key election. So if any key had not turned, Clinton would have won. And one of the keys that turned was the internal nomination contest for the party holding the White House. By so strongly contesting Hillary Clinton, Bernie Sanders turned a key. I'm not blaming him. He has a right to do that, but that was a very close call. Another very close call was the third parties, which we know were quite strong in 2016. Gary Johnson went over 10% in some of the polls. So those were 2 of the late-breaking keys that were incredibly close that turned the tide against the Democrats, along with other keys such as the lack of a big foreign policy achievement, not following up the Affordable Care Act with Republicans in control of Congress, with another big policy change, losing the midterm election. Very, very tight and tough call.
This is what's so
and
cool.
By the way,
well, go ahead. No, please, go ahead.
Right here on my wall, I have this note written on a copy of the Washington Post where I predicted Trump's win. It says, Professor, congrats, good call, and big Sharpie letters signed Donald J. Trump.
So they follow this. It's so cool though, these 13 keys, and you've mentioned them: strong long-term economy, strong short-term economy, no third party, no scandal, foreign military success, no social unrest, charismatic incumbent, uncharismatic challenger. I mean, these are the things that you're looking at. It's not just about the economy, stupid, as so many have said.
No, that's a huge mistake that a lot of analysts have made. If you were just looking at the economy, Hillary Clinton should have won going away. The economy was quite strong in 2016. Voters are not that narrow-minded. That's the 2 things that make the keys different. Is 1, they don't look at any of the conventional campaigning, poll-driven punditry models, and 2, they're not fixated on the economy like most econometric and political science models.
All right, so let's talk about this election, if we can. As you go through the keys, how close is it, and what are the things you're most focused on? As you say, it's nonlinear, but man, what a year we're living in, and they really, as you were going through all those keys, I'm going, check, 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 check.
Yeah.
Talk
but
to us
true
about,
or false, right?
Yeah, exactly. So talk to us about what this looks like.
Yeah, so I'll break it up. The end of 2019, Trump was only down 4 keys. He had a 2-key cushion. The mandate key, obviously they had lost in the midterm elections. The scandal key, you know, only the 3rd president in history impeached by the full House, not to mention other issues. The lack of a big foreign policy success anywhere in the world. And the most controversial one, the fact that he was not one of those once-in-a-generation, truly inspirational candidates with broad appeal like Reagan in the 1980s, who brought in all those Reagan Democrats. Trump's strong approval rating is only between 25 and 30%, and 60% or more don't like him and don't think he's on it. But he was only down 4. Then we get hit with the pandemic and the cries for social and racial justice. And while Trump acknowledged my prediction, he didn't understand the system, which is, remember, it's governing, not campaigning, that counts. And instead of substantively dealing with these problems, he reverted to his 2016 playbook and thought he can talk his way out of them. It didn't work. It cost him 3 more keys. The short-term economy key, which is defined by an election year recession, which we have. The long-term economy key, because we had such negative growth that it brought his average well down.
Right.
And the social unrest key, because of what's raging across the land. Never in the history of the United States has the party holding the White House experienced such a dramatic reversal of fortune in a matter of 3 months. Trump goes from 4 keys down to 7 keys down, 1 more than is needed to predict that he is going to lose in November.
This model is so interesting, and as I said in the lead-in, that you have been spot on for 40 years, but you've also back-tested it for 120 years of U.S. presidential history. I mean, you checked it out, and it has really panned out. But I've got to ask you, and I know other people have kind of pushed you on this. You did call Al Gore in 2000.
Yes. Look, I'll make 2 comments on that. One, you want to say I'm right out of 8 of 9, that's fine. Still a good record.
I like how you think.
Yeah. 2, what was the right call in 2000? I correctly called Al Gore to win the popular vote. He didn't win the Electoral College because he lost by 537 votes in Florida when the Supreme Court stopped the recount. That was a stolen election. Al Gore should have won Florida going away. And I proved this in my 2001 report to the United States Commission on Civil Rights when I showed that there was this huge disproportion of discarded votes between African Americans and whites, and that if you correctly assess the intention of voters, without that suppression, Al Gore would have won going away. So I contend that I was right in 2000. What if I had predicted Bush? Everyone say, "Oh, you were wrong, Lichtman, because Bush stole the election." I think I came as close as you could to being right in 2000.
Okay. You've definitely been asked this a lot before.
Yeah.
We can tell.
That's a good answer.
So I thought it through, believe me. And by the way, I don't even pay any attention to the popular vote anymore. 2016 and 2020, I'm just predicting the winner, because in any close election now, because of what's happened in recent years, the Democrats are going to win the popular vote like Hillary Clinton did, because they pick up 5 to 6 million extra votes in just 2 states, and you know what they are, New York and California.
Right.
And those votes count for nothing in the Electoral College. So the baseline has shifted, so I just predict winners, as I did in 2016.
So before we let you go, I do want to ask you one question that's related to a bunch of things you just said, which is this notion of voting, it feels like, has become a much more prominent social issue. And I think about things like LeBron James and More Than a Vote, and some of the other efforts that are going on in cities, whether it's Atlanta or Indianapolis or Detroit, where they are fighting voter suppression in many ways, clear voter suppression. What do you make of that, and does that have a potential impact on turnout as we have thought about it historically?
It's a great question, and that is one of the 2 things that keeps me up at night is voter suppression. I wrote a whole book which dealt with it called The Embattled Vote in America, from the founding to the present. Look, the Republican base is old white guys like me. You know, I'm 73. You can't manufacture more old white guys. You can't make us live to 150. But what you can do, and what they're trying to do desperately, and they're doing it openly, this isn't a secret, is keep down the vote of the rising Democratic base of minorities and young people. Just look at what they've done to the post office. Look at Trump's fierce attacks on mail-in voting. Well, he's voting mail-in himself, of course, which is a totally reasonable alternative in a pandemic. The other thing that keeps me up at night, and this is also outside the realm of the keys or any prediction system, is Russian intervention. They're back. And they probably learned a lot in 4 years. They may even be more successful, heaven forbid, in getting into our voter registration rolls. But one thing we know for sure, he's already doing it.
Yeah.
Trump will welcome and exploit any Russian intervention that the he thinks will help him. And if you don't believe he did that in 2016, read the report that came out yesterday from Republicans and Democrats on the Senate Intelligence Committee. It's way better than the Mueller report.
I have to say, that report is just telling. Hey, 20 seconds left here. I mean, this was a really good lesson, I feel like, 2016, though, for those polls that we all stay glued to and what the media reports on, right?
Look, I'm not criticizing anyone, but polls are the easy way to write. You don't even have to get up in the morning. You just have to read the polls and write a story. You can stay in bed. Look, I understand the media has to write a story every single day, so they have to rely on the polls. They can't just say, Lichtman says Biden's going to win. See it in 3 months. I get it.
What a treat. This was
so much fun.
This was so much fun. I just want to buy you dinner and like sit and when you can do that again and just sit and talk about every election. This is like this is Carol and me just geeking out completely.
Totally. So come back. I mean, this was truly like listening to these news feeds and just mentioning him, and we're like, we got to get him on. We got to get him on. Alan Lichtman, thank you so much. Distinguished professor of history at American University, author of The Keys to the White House. Check out this podcast. Check out too, the New York Times did a great video with him. That's really a must watch, and really great to talk with him. Joining us from the nation's capital. Let's get to San Francisco. Check in with Ed Baxter on world and national news.
All right, thank you. And just be careful that you make Jason pay for that too. U.S. top infectious disease doctor, Dr. Anthony Fauci, calling for a unified message and guideline from the federal government for reopening schools and universities.
I would like to see a consistent message about schooling, consistent to guide the local authorities who make the decisions about school.
And he says there are institutions that are prepared and left dorms, for example, as empty in case there is a breakout. But he says right now the policy is not there. California fighting the trifecta of major problems along with COVID-19, fire, and energy. Governor Gavin Newsom says firefighting help is coming from out of state. He says there are 367 reported fires in the state, what he calls complex as well of fires.
And so 23 major fires that we are currently addressing aggressively through all our efforts, both the local, regional, and state and federal level.
Now, this along with another record day of heat and the potential of rolling blackouts again. He says Californians need to continue to fight against projected demand deficit today.
284 megawatts of energy being utilized here today. So over 47,000, typically would see about 38,000 megawatts on any summer day. And so we clearly have a lot of work to do.
Yeah, he says fight through today and tomorrow should be cooler. President Donald Trump's chief of staff, Mark Meadows, has thrown Postmaster General Louis DeJoy under the bus.
Actually, the Postmaster General did that on his own.
Yeah, Meadows says he doesn't know how many boxes have been pulled or systems slowed. And tonight is Kamala Harris night at the Democratic Convention. Also on the star-studded card is Barack Obama, Elizabeth Warren, Hillary Clinton. This is a key night along with tomorrow night when Joe Biden will say hi. In San Francisco, I'm Ed Baxter. Let's get your money, a data check. And here is Doug Grisner.
Hey, Eddie, thank you. So we had weaker stocks today. That came kind of midday, 2 p.m. Wall Street time, to be specific, when the Fed minutes were released. Policymakers downgraded their economic forecast for the second half of the year. They also indicated more accommodation may be needed, and they went on to repeat the view that really the path of the recovery is dependent on the containment of the virus. Members also seem to be fairly skeptical about the cost-benefit of adopting yield targeting, and more subtly, they seem to back away from an earlier readiness to clarify the guidance on the future path of interest rates, that forward guidance issue. So the Dow comes in by 0.3% today. We had the S&P 500 down from a record by about 0.5%. NASDAQ comes in also down from a record high, by the way, by nearly 0.6%. One of the bright spots in the regular session, Target, Stock comes in, up by more than 12% today after sales came in well above estimates. Also on the positive side, Momenta Pharmaceuticals rallies nearly 70%. This company is being acquired by Johnson & Johnson for about $6.5 billion. J&J shares, by the way, were up about 2.5%. And staying within the drug group for a moment, Gilead Sciences down nearly 5% today. The company failed to win FDA approval for an experimental arthritis drug. After the bell, we heard from NVIDIA, a strong forecast for the current quarter in terms of sales. Companies seeing rising demand for those chips for data centers. Even so, it looks like some industries away from cloud computing are a little bit more mixed. So NVIDIA on the call with analysts saying, yes, cloud demand is strong. Other industries a little bit more mixed. And as a result of that, we're seeing the stock right now in late trade down about 1.9%. Now, we're getting ready to go to the White House in a short while to hear from President Trump. In terms of stimulus talks, we were hearing that the Trump administration does see the possibility for Republicans and Democrats to agree on a smaller round of pandemic relief, something around $500 billion. We are told this plan would omit the biggest areas of disagreement. And as long as we're talking about the White House, Dow Jones had been reporting earlier that trade negotiators from both the U.S. and China are planning a video meeting in the coming days. We saw a big move in the dollar today, a strengthening against the majors. We had the Bloomberg Dollar Spot Index higher by about 0.6%. We've got a weaker yen, weaker euro, weaker offshore yuan. So as we get set for Asian trading, keep your eye on the ramifications of a stronger dollar. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you. We are awaiting some comments from the president down at the White House. In the meantime, this has been a heck of a fun show.
I know. I've just been going over it. I'm trying to tweet some stuff out, and we're also kind of thinking about our weekend show. I got to say, Alan Lichtman, first of all.
Man, that guy delivered.
He totally delivered, and I do highly recommend check out the New York Times video. Maybe I'll put it out. I think I already tweeted it. But it's just fascinating. And listen to our podcast again, because he takes you through those 13 keys to getting to the White House. And listen, how much, during the run-up to the 2016 election, we were all following the polls, and they were saying one thing, and we all just kept repeating it over and over, a bit of an echo chamber, if you will. And he called it very differently. So too did, and I don't know if our producer Paul Brennan remembers, there's a guy who sells Halloween costumes, and apparently he has always called the elections right based on sales of costumes in October, and apparently the Trump costume was selling big time come in 2016. So he too was calling Trump for the White House. So that's just another indicator.
Yeah, interesting.
But
Halloween
anyway,
will be a little bit different this year. Yeah, I mean, I think it's interesting to think about, and there's a real connection between the two guests that we had earlier this hour. One, the president of Morehouse College, who finds himself, at the center of so many different things, not just as it relates to higher education, and obviously anyone who listens to this show, and certainly know that I talk and think a lot about Atlanta. It's my hometown. My aunt Joni taught for many years at Morehouse College, so I'm very familiar with that school. It is an institution like no other, and I was glad that President Trump sort of pointed that out, that it is the only historically black college that is men only, and so it approaches things in a slightly different way.
Yeah.
The recent history it has with Robert Smith, well known in the private equity world, who basically got up to give the commencement speech and said, anyone in this graduating class who has any student debt, I am paying off your loans. I mean, was unbelievable. And apparently we didn't get a chance to talk about it, but basically that stemmed from a conversation that he had over dinner with President Thomas, where President Thomas said, this is the main thing that I'm worried about right now. And Robert Smith didn't tell anybody he was going to do it, just got up and did it. But one of the things that he said, which was so powerful, is this notion, because he has studied this intersection, as he said, around, race and organizations and leadership, his optimism that there is something different happening right now. And I think it's because, and I don't know whether this caught you the way that it caught me, but basically he said, the words that people are
That's
using
what he said. Yeah.
at the highest level of leadership, and I've heard those words from Henry Kravis and others, they are saying the words institutional racism.
Right. Institutional racism, systemic racism, right? This is something that people are talking about. And he says the use of, as you said, Jason, the use of that terminology by people in really high positions is what gives him hope at this point. You know, and I hope he's right, you know, that it is something different this time around, because we certainly have had a lot of conversations, I feel like, for a long time about the racism in our society. Think about the reporting, the unbelievable reporting, Bloomberg Markets, the diversity issue, and other reporting about being black on Wall Street and what it's like, being black in Silicon Valley.
Yeah.
We, you know, despite the conversations, despite, you know, the groups within institutions to help improve situations, here we are.
Right, right. Well, and then, you know, going back to his day job and the decisions that he's had to make around canceling the football season, you know, basically saying we're not going to play football.
Yeah.
In a city, and again, this is an area I know pretty well, in a city, in a region which is obsessed with football, obsessed with college football specifically, and you know, him telling that story and basically saying, look, I didn't even know I was the first guy making this decision, but here's what I know. We give these kids scholarships so that they can graduate from Morehouse. We don't give them scholarships so they can play football for 3 years and then go be pro football players. That whole notion, I mean, go figure, actually thinking about a student athlete as a student athlete is kind of novel, it feels like these days.
That it's just, if not more important. You know, if you think about it. Listen, you know, he's made some tough decisions, right? And has been out there front and center. So I feel like, you know, so much is staying with me about that conversation. And I do think about, you know, the kind of turmoil that has just been, as you say, your home state, Atlanta, Georgia, and the decisions that he made no matter what. All right, we do want to take you to the nation's capital. President Trump getting ready for that news briefing.
Our continued progress against the China virus. I'd like to discuss our latest actions against the Iranian regime. Today, I'm directing the Secretary of State, Mike Pompeo, to notify the UN Security Council that the United States intends to restore virtually all of the previously suspended United Nations sanctions on Iran. It's a snapback, not uncommon. 2 years ago, I withdrew the United States from the disastrous Iran nuclear deal, which was a product of the Obama-Biden foreign policy failure, a failure like few people have seen in terms of the amount of money we paid for absolutely nothing and a short-term deal. This deal funneled tens of billions of dollars to Iran, 150 billion to be exact, plus 1.8 billion in cash, which I don't know that the president had the authority to give, but gave 1.8 billion in cash. Just another great deal that turned out to be a total disaster that would have funded all of the chaos and the bloodshed and the terror in the region and all throughout the world. And I won't say anything because I don't like saying it, but Iran doesn't have so much money to give to the world anymore, to the terrorists, to give to Al-Qaeda and various other groups of people that they were funding. They have to keep their own regime together, and it's not easy for them. And if and when I win the election, within the first month, Iran will come to us, and they are going to be asking for a deal so quickly because they are doing very poorly. But that deal was a disaster. $150 billion, $1.8 billion in cash. And we got nothing except a short-term little deal. A short-term, expiring. It's starting to expire already. It's terminated, but it would have, if we didn't terminate it, start to expire very shortly. A good deal was the deal we made with UAE and Israel. And by the way, other countries, I will tell you now, want to come into that deal. Countries that you wouldn't even believe want to come into that deal. And all of a sudden, you're going to have peace in the Middle East. And you couldn't have done it with this ridiculous Iran nuclear deal, as they call it, that President Obama made, along with Sleepy Joe Biden. I imposed the toughest ever sanctions on Iran. And this has cause great difficulty for them giving money to terrorist organizations, and if they do, they'll have hell to pay. Earlier this year, I ordered the strike that took out the world's #1 terrorist, Qasem Soleimani, in addition to previously terminating leader and founder of ISIS, Abu Bakr al-Baghdadi, the two leading terrorists by far in the world. The founder of ISIS, nobody even talks about that. And we also defeated, we now have 100% of the ISIS caliphate in Syria. When I took over, it was a mess. It was a total mess. They were all over the place. My administration will not allow this Iran nuclear situation to go on. They will never have a nuclear weapon. Iran will never have, mark it down, Iran will never have a nuclear weapon. When the United States entered into the Iran deal, it was clear that the United States would always have the right to restore the UN sanctions that will prevent Iran from developing a nuclear weapon. We paid a fortune for a failed concept and a failed policy, a policy that would have made it impossible to have peace in the Middle East. Here at home, through Operation Legend, we are confronting the wave of crime in Democrat-run American cities. It's absolutely shocking. When you look at Portland or New York, San Francisco, Seattle, Chicago, sometimes Los Angeles, Democrat-run cities, they're a mess because they don't get it. Either they don't get it or there's something that nobody else understands. We've deployed more than 1,000 additional federal agents to help these Democrat-run disasters. We just have done this. We have to give them a hand. And we can stop it immediately, like Portland would be so easy to stop. We'd stop it immediately. We only sent in some Homeland people who are great, by the way, to save the courthouse because it would have been blown up or burned down. And they did that very easily. But if we were called upon, we would send in, whether it's Homeland, whether it's FBI, whether it's just law enforcement, and we'd send them in quickly. We would eradicate it just like happened in Minneapolis. As soon as they were called in, they should have been called in a lot sooner. You would have had far less damage. Today we announced that Operation Legend has successfully resulted in nearly 1,500 arrests already. Bad ones, really bad people. Prosecutions and prison sentences will follow, and they'll be a very long time in prison for what they've done to these cities. Most cities are well run, most of the nation is well run, and the areas that we're talking about are all, in all cases, run by Democrats, usually radical left-leaning Democrats, like in New York or in Portland. We've made arrests in Kansas City, Chicago, Cleveland, Detroit, Milwaukee, St. Louis, Memphis, and Albuquerque for many violent crimes, including gun crimes, arson, and 91 murders. We're also using the full power of the federal government to defeat, as you know, the China virus. New cases have declined in 80% of the jurisdictions in the past week, 80%. New Zealand, by the way, had a big outbreak. And other countries that were held up to try and make us look not as good as we should look, because we've done an incredible job, but they're having a lot of outbreaks, but they'll be able to put them out, and we put them out. The hospitalization rate has fallen in our country, 54% since its peak in April, 54%. Older Americans are still the most vulnerable to the virus. 92% of deaths have occurred among those 55 and older. Only 2.7% of deaths have occurred among those 44 years. Think of that, 44 years and younger. So 44 years old and younger, only 2.7% of deaths have occurred. And many of those people had pre-existing conditions, they had problems, heart, diabetes, and other problems, but many of those. So think of that, only 2.7% under 44 years of age. Excess mortality in Europe this year is 33% higher than the United States. Evidence that the tragic cost of this virus is higher in other Western nations. South Korea, you've been reading about South Korea doing well. Well, they just had a very big breakout, but they'll be able to solve the problem. We must all remain vigilant and continue to exercise extreme caution around those at highest risk. As we know, multiple colleges and universities announced that they would suspend in-person teaching. And we have learned one thing: there's nothing like campus, there's nothing like being with the teacher as opposed to being on a computer board. It's been proven a lot better. It's a lot better. The iPads are wonderful, but you're not going to learn the same way you do by being there. So nevertheless, certain colleges and universities have announced that they would suspend the in-person teaching. For older people and individuals with underlying conditions, the China virus is very dangerous. For university students, the likelihood of severe illness is less than or equal to the risk of a seasonal flu. And the seasonal flu happens and comes and it goes, and it can be very bad, but people don't talk about it in the same way, and they shouldn't. But if you look at that, the odds are less than or equal to. Instead of saving lives, the decision to close universities could cost lives. It is significantly safer for students to live with other young people than to go home and spread the virus to older Americans. Makes sense? And the shutdown thing is causing tremendous depression for those places that are still shut down. You look at certain areas that, in all cases, Democrat-run, still shut down, and their numbers there aren't even good, but causing tremendous depression, suicide, drugs, alcohol, abuse. A lot of problems are being caused. Probably far more, I would say, Scott, than is caused by the virus itself, now that we understand the virus. Colleges should take reasonable precautions. Students who feel sick should not attend class and should limit social interaction as they would for any other illness. And universities should implement measures to protect the high-risk students or professors and teachers. The ultimate goal of testing is to prevent transmission in high-risk settings and to prevent transmission, period, but especially in nursing homes, and to care for the vulnerable and our elderly, which really fit into that definition of who is vulnerable. We have tremendous unused testing capacity in our country. We have a tremendous unused testing capacity. It's something that a lot of other nations are very impressed with, they tell us. In our path forward, we will continue to follow a science-based approach to protecting the high risk while enabling healthy Americans to safely go back to work and school. Our country will be open. Our country is getting open quickly. Our stock markets are almost back to where they were prior to the China virus disaster coming in. And I want to thank you all for being here, and we'll take some questions. Yeah, please.
During the pandemic, the QAnon movement appears to be gaining a lot of followers. Can you talk about what you think about that and what you have to say to people who are following this movement right now?
Well, I don't know much about the movement other than I understand they like me very much, which I appreciate. But I don't know much about the movement. I have heard that it is gaining in popularity, and from what I've heard, these are people that when they watch the streets of Portland, when they watch what happened in New York City in just the last 6 or 7 months, but this was starting even 4 years ago when I came here. Almost 4 years, can you believe it? These are people that don't like seeing what's going on in places like Portland and places like Chicago and New York and other cities and states. And I've heard these are people that love our country and they just don't like seeing it. So I don't know really anything about it other than they do supposedly like me, and they also would like to see problems in these areas, like especially the areas that we're talking about, go away, because there's no reason the Democrats can't run a city. And if they can't, we will send in all of the federal, whether it's troops or law enforcement, whatever they'd like, we'll send them in, we'll straighten out their problem in 24 hours or less, okay?
Well, just real quick, at the crux of the theory is this belief that you are secretly saving the world from this satanic cult of pedophiles and cannibals. Does that sound like something you are behind? Or
Well, I haven't heard that, but is that supposed to be a bad thing or a good thing? I mean, you know, if I can help save the world from problems, I'm willing to do it. I'm willing to put myself out there, and we are actually. We're saving the world from a radical left philosophy that will destroy this country, and when this country is gone, the rest of the world would follow. The rest of the world would follow. That's the importance of this country. And when you look at some of the things that these people are saying with defund the police and no borders, open borders, everybody just pour right into our country, no testing, no nothing. You know, you talk about testing, no testing. Mexico, as you know, has a very high rate of infection. The wall is now going to be next week 300 miles long. Our numbers are extraordinary on the border. Had that, and this is through luck, perhaps, more than talent, although the talent is getting it built when one party refuses to allow it. You don't hear talk about the wall anymore. But I will say this, we need strength in our country, not weakness. Too much weakness. Yes, John.
Mr. President, you have been very bullish on the promise of convalescent plasma to treat coronavirus. The FDA appeared to be on the brink of issuing an emergency use authorization for convalescent plasma, but after hearing from top officials at the NIH that there wasn't enough evidence to go ahead with that, the FDA has put that on pause. Your reaction to that, and do you believe that convalescent plasma should be in the arsenal of treatments for coronavirus?
Well, I hear great things about it, John. That's all I can tell you. And it could be a political decision because you have a lot of people over there that don't want to rush things because they want to do it after November 3rd. And you've heard that one before. But I've heard fantastic things about convalescent plasma. And I've heard numbers way over 50% success. And people are dying, and we should have it approved if it's good. And I'm hearing it's good. I heard from people at the FDA that it's good. So we'll see. I'm going to check that right after this conference.
My understanding that the White House will encourage the NIH and the FDA to get this out there as quickly as possible.
Well, the numbers are as good as I'm hearing. I mean, I'm hearing over 50%, and that's very good. And we've approved certain things that are at 31%, and that's okay too. That's not bad, and it's really had a tremendous impact. No, I have, you're telling me something right now that surprises me, but we'll check it out right after this.
Concerned about a delay?
I don't want delays. I don't want people dying. I don't want people dying. Yeah, please, sir.
Mr. President, I want to ask you about your tweet earlier today on Goodyear. It was essentially calling for a boycott on Goodyear tires. Do you want the federal government to stop buying and using Goodyear product as well? And is there anything?
I'm not happy with Goodyear because what they're doing is playing politics. And the funny thing is the people that work for Goodyear, I can guarantee you, I poll very well with all of those great workers in Goodyear. And when they say that you can't have Blue Lives Matter, you can't show a blue line, you can't wear a MAGA hat, but you can have other things that are Marxist in nature, there's something wrong with the top of Goodyear. And what the radical left does is they make it impossible for people to do business if they're Republican or if they're conservative. They put out all sorts of effort, don't shop there. They do vicious things not so different than what you saw on the streets of Portland 2 nights ago.
Boycott do you envision?
Oh, I don't know. That's up to people, but I wouldn't recommend it. If they want to hold political speech, if they want to let you not do what everybody's doing, if they want to wear a MAGA hat, or if they want to wear a Blue Lives, you know what Blue Lives Matter, right? That's policemen and women. That's a terrible thing. That's a terrible thing. So they're using their power over these people, and these people want to wear whatever it is that we're talking about. You know that. And so I would be very much in favor if people don't want to buy there. And you know what? They'll be able to get a good job, because we set a jobs record over the last quarter, as you know, the most jobs ever in the history of our country. You'll be able to get another good jobs. I think it's disgraceful that they did this. Please, go ahead.
Yes, Mr. President, you've said that the arrest of Jimmy Lai in Hong Kong is, quote, a terrible thing. Do you have a message for Jimmy Lai? Has your administration spoken directly with him? Is your State Department working for his release?
Well, I send him best wishes. I hear he's a wonderful gentleman. He's certainly a brave man, and I send him best wishes. With that being said, because of that, and obviously what happened in Hong Kong, we've taken all of the vast amounts of money that we used to subsidize Hong Kong. We essentially subsidized Hong Kong by giving them all sorts of incentives, and that's what made Hong Kong, the exchange and business in Hong Kong, successful. I've taken it all back. That means that the United States is going to do a lot more business. You know, we really gave them tremendous incentive and subsidy in order that they be successful for freedom. But now that the freedom obviously seems to have been taken away, we will keep all of the incentives that we were giving them, which is billions and billions of dollars, and all of that business will come into our country, including the New York Stock Exchange and NASDAQ, and it'll all come here. But I feel badly for him, because I hear he's a good person. I don't know him, but I hear he's a good person, obviously a very brave person. Did you have something? Go ahead.
Yes, sir. Thank you, Mr. President. With the Iraqi Prime Minister coming in tomorrow, what about the Iraqi Prime Minister is coming in tomorrow to meet with you, and how do you feel about this notion that Iraq can once again become the buffer between Iranian influence and Russian influence in the Middle East? Do you feel that under this Prime Minister that that's possible once again? What are your thoughts on it?
Well, this is a man that I get along with very well. We're largely out of Iraq. We're down to very few soldiers. I said we're getting out of these endless wars, these ridiculous endless wars. We should have never been there in the first place. I think it was the worst decision made in the history of our country. Should have never been there. In the Middle East, we should have never been. But we're getting out rapidly out of, over the course of 3 years. And getting out, it's very sticky getting out. And some people agree, and many people don't agree. But I think most people very much agree. We're doing very well in our negotiations with Afghanistan, with getting out. We're down to a much smaller number of people left there. And, I greet men and women coming home and coming home after they've been hit. I've also greeted many at Dover, greeted many bodies coming back in. And we've been there 19 years, and we're basically policemen. We're acting as police as opposed to soldiers. And they're going to have to police their own states. And they've been doing that for thousands of years. But it's time after 19 years that our soldiers come home. They've done an incredible job, but they're not allowed to fight to win, and maybe they shouldn't be, because a lot of the people, it's not their fault. But with the Taliban and with going to Iraq again, we're down in Afghanistan, very low numbers, and that'll be taking place. And I let them know, do anything and you'll be hit like you've never been hit before. So we're doing very well. Syria, the same thing. Remember when I took all of the soldiers off of the border between Syria and Turkey, right? And everybody said, oh, that was 2 years ago. It was a long time ago. They said, oh, this is terrible, terrible, terrible. We're going to leave. Why do we have our soldiers between Syria and Turkey? Turkey can definitely take care of itself. I have a very good relationship with President Erdogan, and Syria's been fighting forever. And I say, why are we guarding their border? And I brought our soldiers back home. I got them out, and guess what? Nothing's happened. They've been fighting like they have been for 1,000 years, okay? Nothing's happened, and nobody mentions that. Everybody said this is going to be a disaster. There's no disaster. Nothing's happened. And so we're getting out of the endless wars, and we are building a military the likes of which the world has never seen. $2.5 trillion we've spent, and we hopefully don't ever have to use it. But we want to focus on a much bigger picture, because we have a much bigger picture. It's when you look at what China's doing, when you look at what Russia's doing, when you look at what some other countries are doing, we want to be ready just in case there is a catastrophe. We don't want to see that. We don't want to ever use it. We've rebuilt our military, new missiles, new rockets, and new tanks, and new everything, $2.5 trillion, all made in the USA. And we've upgraded incredibly our nuclear capability, and some of our nuclear needed nourishment. It needed new strength, and we've upgraded it very, very significantly. I mean, to a level that nobody would even believe. And hopefully we don't. You pray to God we never have to use it, okay? But we've never been in a position where we've been this strong. Please.
President, thank you so much. I wanted to ask you about the Middle East. I have a couple questions. You mentioned that other countries are interested in following suit
Yes,
after the
having to do with UAE and Israel.
Exactly. So
Correct.
do you expect that Saudi Arabia will join? And
I do.
Yes. And also the Emiratis have expressed interest in the F-35. Do you think that that should be something that they could look forward to in the future? Is there some sort of time delay?
I think, look, they've definitely got the money to pay for it. You know, it's nice because usually when a lot of times we make deals, they don't have 10 cents, these countries we deal with. We give it to them like, how about paying us back later? But they never pay because they don't have the money. No, they have the money, and they would like to order quite a few F-35s. It's the greatest fighter jet in the world, as you know, by far. Stealth. Totally stealth. You can't see it. Makes it very difficult. I was asking a pilot, what do you think is better? This one, that one? Talking about Russian planes, Chinese planes. He said, well, the advantage we have is you can't see it. So when we're fighting, they can't see us. I say, that sounds like a really big advantage to me. To these guys, you know, they look, by the way, I said, to these pilots that I meet, they look better than Tom Cruise, and they're definitely tougher. And he's a nice guy. But these people are amazing, and I speak to them a lot about it. What do you think, you know, as I go around to the various places? I saved the big one in Florida as an example. That was a big one, knocked down pretty much by the hurricane. So I spent a lot of time on that, and it's the greatest plane in the world. One thing about that kind of thing, technology, high technology, greatest plane doesn't last long. Somebody comes up with something else, but we're always the one to come up with something else. So, yeah, they'd like to buy F-35s. We'll see what happens. It's under review, but they made a great advance in peace in the Middle East. Even the New York Times thought it was an incredible deal. Can you imagine that? Tom Friedman had a very nice thing to say about it. I spoke to him about it. He thought it was terrific, and it is terrific. I see a lot of countries coming in fairly quickly, and when you have them all in, ultimately Iran will come into. There'll be peace in the Middle East. That'll be nice. Iran will be very much neutralized. They never thought this could have happened. And with the horrendously stupid Iran deal signed by Obama, this could have never happened.
On the Goodyear issue, you ride on Goodyear tires in the presidential limousine.
Correct.
If there were an alternative, would you want those tires swapped out?
Yeah, I would do that. I would swap them out based on what I heard. We'll see what happens. Look, you're going to have a lot of people not wanting to buy that product anymore, and they'll buy from a competitor. Made in the USA too. Okay, please. Go ahead.
Mr. President, excerpts from Obama's speech that he'll give later at the Democratic Convention show that he says that he hoped that you would take being president more seriously once you had the job and discover reverence for democracy. And then he said, I quote, but he never did. What is your reaction to that?
You know, when I listen to that and then I see the horror that he's left us, the stupidity of the transactions that he made. Look what we're doing. We have our great border wall. We have security. We have the UAE deal, which has been universally praised by people that aren't exactly fans of Donald Trump for various reasons. I don't know why. It can't be my personality, but they're not fans, right? And when I look at what we have, and I look at how bad he was, how ineffective a president he was so ineffective, so terrible, slowest growing recovery in the history, I guess, since 1929 on the economy. Don't forget, until the China virus came in, we had the greatest economy in the history of the world. And now we're doing it again. I'm going to have to do it a second time. We're doing it again. Hard to believe. We're doing very well. You heard the numbers. They're way, way down on the virus. But when you look at the kind of numbers that we're producing on the stock markets, we're almost at the level. In fact, NASDAQ and S&P are higher than they were at the highest point prior to the China virus coming in, the plague coming in. Now, President Obama did not do a good job, and the reason I'm here is because of President Obama and Joe Biden. Because if they did a good job, I wouldn't be here. And probably if they did a good job, I wouldn't have even run. I would have been very happy. I enjoyed my previous life very much. But they did such a bad job that I stand before you as president. Thank you all very much. Thank you.
You've been listening to President Trump in a live briefing there at the White House and taking questions from reporters. Hi, everybody. Good morning to you from Hong Kong. I'm Brian Curtis. This is Bloomberg Daybreak Asia, along with Ed Baxter. Our colleagues Doug Krisner and David Ingles will join us in a few moments, and also Bloomberg reporter Emily Wilkins is standing by. Just to recap really briefly, Ed, before we get into some of the teeth of this, at the beginning, the U.S. to restore UN sanctions on Iran, and he referred to his own credentials in targeting foreign combatants. He talked about crime in Democrat-run cities, although I have to say this was a little bit less political than some of these briefings. He did compare COVID-19 to the flu again, particularly for college students, and he said the shutdown was probably worse than the virus itself. And there was this odd mention of QAnon, a group that says that that President Trump is saving the world from a global cabal of Satan-worshiping pedophiles. And he defended his Goodyear tweet, and this was one where he used the office of the president to call for a boycott against an American company because Goodyear took a stand about political speech. And briefly, best wishes to Jimmy Lai, that the U.S. should never have been in the Middle East, the soldiers should come home, and that he might sell the F-35 fighter jet to Saudi Arabia. So some interesting lines there. Ed Baxter, your takeaway from some of the comments that I just mentioned.
Yeah, I want to just my favorite line of the whole thing, and I don't need to make light of it, but that the fighter pilots were better looking than Tom Cruise. I mean, yeah, just that's just a throwaway line. Outside the news conference, by the way, when he talked about, Brian, you said about the college students, Dr. Anthony Fauci today came out very specifically and asked the federal government to come up with guidelines. So that is very, very diametrically opposed to what the president talked about today. And just if I may briefly, and then we can talk to Emily about it, I was very surprised, and I have to ask the question of whether reporters are being screened or whether they just didn't think it was important, because at the top of the news for the last 3 days is the post office. And his chief of staff came out earlier today, Mark Meadows, and said that the president had nothing to do with it, and that it was the postmaster general who had done it all, and that would seem to be fodder for at least a question, and that did not come up during the Q&A session.
And also, yesterday he said that he ended the talks with China, and that he was, was very uncomfortable and displeased by China. But then today we learned that that the talks could soon be back on very quickly. And there was also Hong Kong very much in the news today. That didn't really come up too much. Let's bring in Bloomberg reporter Emily Wilkins, Ed, to see what she thinks of the proceedings. Emily, he talked about quite a number of issues there. And again, as I mentioned, it wasn't quite so much about politics this time.
No, we did see sort of a variety of things. I mean, President Trump did start off by talking about how the U.S. does plan to submit a formal request to the U.S. Security Council to implement sanctions on Iran. It's unclear if he's actually going to be able to do this because the U.S. did pull out of the Iranian nuclear agreement. That was some big policy news there. But I mean, there's a ton of stuff going on right now. It's sort of a bit of a potpourri of topics.
Yeah, and Emily, I have to ask you about Iran. He went to the snapback. That had been advertised for a couple of weeks, reinstituting all sanctions under the Iran nuclear deal with the UN. Yet he pulled out of that deal. Does that seem to be any kind of a conflict, or how does that all come together?
Absolutely, and I think it's going to remain to be seen exactly how this plays out. But yeah, the U.S. has left the agreement, and so for us now to be trying to implement sanctions, it's very unclear how or if that could even work. You also see our European allies who are still in the agreement. They're opposing the U.S. trying to reimpose sanctions. So that's their...
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊。我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话。 去改变他们的想法，我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，布鲁蒂能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What up everyone, it's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with 2 hands and rotate the thing. I could stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now.
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
York City have helped everyone else in the world. It's nobody's fault that these things occurred when we didn't know what was going on. Now that you do know what's going on, however, you have to take prudent steps. Wear a mask, have your distancing, have your cleaning, do the appropriate measures. That said, it is a matter where you can operate at the occupancy which is allowable. We're operating at the Empire State Building Observatory right now. We've got the same ventilation there, depending upon the density that we planned for visitors there. The fresh air comes into that space 3 to 22 times an hour.
Very quickly here, Tony Malkin, last question. What portion of rents are not being paid?
So in July, we reported 91% collection, lower in retail than in office.
Very good. Tony Malkin, thank you so much. Just really, really love having you on. We'll do this again soon. With Empire State Realty Trust, Mr. Malkin, of course, part of New York City. I really can't say enough about the Bloomberg article, heavily reported today on the emptiness of Midtown Manhattan. And as I've said before, certainly we've seen this from London and other cities as well. I believe even Prime Minister Johnson speaking about it a week ago as well. It has been a most eventful day. Anna Edwards, thank you so much for being with us. Greatly, greatly appreciated in her extended London day. Let me do a data check right now. It has changed off of the Fed minutes yesterday. To review the Fed minutes, surging yields, yield curve control maybe out the window, an abrupt reversal. A lot of research notes. John Herman at MUFJ, Stephen Englander with a blistering note, excuse me, in Standard Charter. And you saw a reversal here in the move yesterday, and then with a vengeance, a further move off the claims report of 8:30, 25 minutes ago as well. 30-year bond in 5 basis points, 4 basis points on the 10-year yield, 0.64%. Futures negative 14. The dollar was fractional straight this morning. Tonight, 9 p.m., David Weston, our coverage of the Democratic National Convention, our coverage of the speech of Joseph Biden. This is Bloomberg. Good morning.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City, for our viewers worldwide, I'm Taylor Riggs, and for Jonathan Farrow, the countdown to the open, well, it starts right now. And we begin with the big issue, initial jobless claims unexpectedly rising, climbing back above 1 million and topping all of Bloomberg's 40 estimates. The results showcasing a jobs market that continues to be deeply impaired and confirming the Fed's concerns yesterday afternoon about the pandemic weighing in on the recovery. Those meeting minutes saying, quote, members agreed that the ongoing public health crisis would weigh heavily on economic activity, employment, and inflation in the near term and was posing considerable risks to the economic outlook over the medium term. All of this as the clock continues ticking for a fiscal deal in Washington as lawmakers remain divided.
The outlook for a skinny deal is better than it's ever been, and yet we're still not there.
Let's bring in Bloomberg's Mike McKee with more on the data. Mike, those jobless claims not where we thought they would be.
Well, you know, Taylor, there's an old saying, I've talked about this before, that nothing concentrates the mind like a hanging. So maybe the jobless claims numbers will weigh on the lawmakers down in Washington and push them a little bit, because you're right, they were terrible. After 21 weeks, last week we slipped below 1 million jobless claims. Now we are right back over it again, and not just the initial claims on a seasonally adjusted basis, unadjusted rose as well. We're now at 1,106,000. Not only that, the initial jobs claims figures from last week were revised higher to 971,000. So the labor market picture, all in all, worse than we thought it would be. This doesn't even include the pandemic assistance that goes to self-employed and gig workers, that sort of thing. There were another 543,000 people getting those benefits. So 1.6 million people in all are getting benefits right now, and that is not good news. Overall, almost 30 million, 28 million getting some sort of benefits for being unemployed at this point. We also had the Philadelphia Fed index out at the same time. It slipped as well. Remember, we had a bad empire number. People were worried about what it meant for Philadelphia, and Philadelphia comes in at 17.2 versus 24.1 the prior month. And in August, the employment index for the Philly Fed falls to 9 from 20.1. So you're right, we definitely have labor market issues right now, and that's going to have to weigh on what's going on down in Washington. Interesting data out from the Peterson Institute this morning. A study back of the envelope calculation that if the unemployment benefits are not extended, it will cost the economy as much as $500 billion and could take 4 to 5 percentage points off of GDP, something for the lawmakers, again, to keep in mind. As for the Fed, we had the minutes yesterday, of course, and the Fed disappointed the markets. A lot of people in the markets pricing in the idea that the Fed would be changing its parameters, its formula for how it attacks the inflation and unemployment numbers, but they didn't. They basically just said that we're going to continue looking at this. It will be at some point when we finish the framework review published. Last month they said, or at the last meeting, which did come, the meetings minutes came out last month, they said that they would, in their words, provide greater clarity regarding the likely path of the target range for the federal funds rate appropriate at some point. And they also suggested that they would be doing it within the next couple of meetings. This time, Taylor, they just said it would be helpful if they do it soon. the markets had priced in the idea of a quick change, but it doesn't look like that's coming. So we have had several whipsaws for investors with the economic data and the central bank.
Yeah, and you've seen bond yields move in both directions on the back of the meeting yesterday, and then, of course, those jobless claims today. Bloomberg's Mike McKee, thank you, as always. Laura Goodwin of New York Life Investments weighing in on that, saying that, quote, labor market performance illustrates this tension between market optimism and economic realism. Markets are focused on the second derivative of job creation, a slower pace of new claims at the expense of overall activity. And Lauren Goodwin joins us now. Lauren, it's never too early to talk about second derivatives on Bloomberg, even at 9 a.m. What worried you most, the level or the rate at which the claims are rising now?
Well, first of all, good morning, Taylor. It's so nice to see you and great to be with you. As the note mentioned, the markets have been focusing on the rate of change, and it makes sense because good news or a trend in the right direction is good news full stop. But what today's number illustrates is the fragility of that good news, that second derivative focus, when the labor market as a whole is in dire straits. So even as new unemployment claims for the past couple of weeks looked a little bit better, we're still adding about 1 million new unemployment claims to the economy each week. At the same time, labor force participation is declining, and the risk that these continuing claims become long-term unemployment is rising as well. And so that focus, again, on the short term is at the expense of the longer term, and that's what really drives earnings. It's what drives asset class performance in the marketplace.
Well, and Lauren, we heard from Mike McKee right before your segment. The markets have been whipsawed. Yields were a lot higher, of course, after the Fed meeting minutes. Seemed to disappoint a little bit yesterday, the lack of yield curve control, a slower inflation than we thought. And then, of course, today on those jobless claims getting whipsawed back the other way. Your takeaway on the Fed maybe not coming out as strong as we thought on that yield curve control, on their thoughts on inflation.
Well, I agree with Mike in that I too was surprised at the Fed's at the Fed minutes yesterday. I was expecting three things from that. I was expecting that yield curve control would be put aside for now and that the focus on average inflation targeting would be the Fed's strategic review conclusion. So that it wasn't surprising. What was surprising is that a stronger forward guidance, maybe in the direction of the Bank of England's sustainably reached inflation target rather than current language, which is more on track towards inflation targeting, or increased purchases or credit easing from the Fed in September. I thought that those two things would accompany the Fed's strategic review results, and it looks less likely that that's the case. And I understand why markets are disappointed by that news, because I think that was the baseline expectation. But the Fed is all in this economic environment. So I don't see a risk that monetary accommodation is in any direction hawkish. In fact, I would suggest that risk on the Fed front is actually to the more dovish side over the next several months.
Well, Lauren, with the Fed all in, they sort of punted the ball back to Congress yesterday, and it's really time for fiscal stimulus to step up. Does the data today, does a little bit of a sell-off in the market push Congress to move a little bit closer to getting the stimulus deal done?
I certainly hope so. From a macroeconomic perspective, doubts on fiscal stimulus is probably the key risk facing the market over the next several weeks. And the decline in new claims that we had seen in the declining pace of new claims that we'd seen in the past couple of weeks were actually a double bad news, in the sense that we were still adding jobless claims, but that the pressure on Congress was a little bit lighter. My expectation is that these the lessening of some of these market supports would encourage Congress to move a little bit more quickly. But the fact that this is even a question is perhaps the biggest risk for the U.S. economy at the moment.
The fact that stimulus is still a question, it's not a guarantee, what does that do to your portfolio positioning, given all of the unknowns out there?
Well, as long as this virus is with us and as long as it takes control in our communities, investors are going to face a very low conviction investment environment. In fact, the virus and the policy response to virus are the two key factors that we're watching when it comes to making any positioning calls. And so the fact that these two things are in question, the virus, of course, we have very little control over. Policy, we do have control over, but there are doubts, mean that it's very difficult to be confident in a durable cyclical recovery. We can see bouts of outperformance in cyclical asset classes like small caps and value, but the core of this market environment is one that's going to be driven by COVID resilient business models and securities that respond to this policy. So areas where the Fed is buying, for example. And until, again, that policy support is secured, and as long as this virus is with us, that will remain the case. Those will still be the things that work in portfolio positioning.
And are those tech continuing to prove even today that it's more defensive than broader markets?
Yeah, you know, the story around high-flying growth names or tech names in particular is about two key topics in my perspective. One is what's working or what should be working in a COVID environment, and the other is creative hedges in a portfolio. So what's working? COVID resilient business models, stable balance sheets, reliable cash flows. And so even in an environment where valuations feel high, these sectors can continue to outperform while many of us aren't able to go to work or at least have to do work from the couch. They're leveraging those pre-existing trends of digitization and e-commerce and making that work from home environment possible. So yes, they can continue to outperform. That said, there's an understandable discomfort with valuation levels as they are. And that's why we've seen so much conversation around these names. But for investors who are uncomfortable with those valuations, I'd caution against simply transitioning away from tech and growth names and instead thinking about a cross portfolio hedging opportunity. So taking a little bit off the top, taking profits in some of those names and investing in international developed equity, regions like Europe or Japan that have value characteristics, but can provide, instead of just value support in your portfolio, that also exposure to cyclical opportunities if economic growth in those regions continues to outperform.
Lauren, square something with me lastly here. I've heard this week from other strategists, full faith in credit, investment grade is that bond-like portion of the portfolio. High yield is more equity light, given the risks, given the bankruptcies, given the downgrades. Are you viewing now high yield more as an equity light?
I think that could be a fair characteristic of some areas of the high yield sector, especially the lower quality high yield sector. If there is one thing that we've learned from this COVID-19 environment, it's that the virus has created real winners and losers. And so from my perspective, dipping your toes into high yield, especially for investors looking to add carry or to build income in their portfolios, can make a lot of sense. But security selection is of paramount importance in this environment because, to your point around equity-like characteristics, we are likely to see a slow but steady credit default cycle play out over the coming quarters. And so picking those winners from losers, again, even just within the high yield asset class, is of paramount importance for investors.
Lauren Goodwin, thank you for your time and for your thoughts. Coming up, they're confirming plans to resume trade talks with U.S. officials sometime soon. That conversation coming up next. We're speaking with Brian Nick, Nuveen, Chief Investment Strategist. And in the market, starting to roll over just a little bit. We got a big rollover yesterday after those Fed meeting minutes. Yields had jumped. Now yields are back down to about a 137 on that 30-year, coming off from a 141 that was yesterday. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
China has been, participating in the WTO like every other member. Whether or not what they do, their practices are in full compliance of their commitments, this is something that only the members can ascertain. Clearly, a lot of members, and China included, have been at odds on how their practices would or would not comply with their obligations in the WTO.
World Trade Organization Director General Roberto Azevedo weighing in on China's role in the organization. This, all as the Chinese Commerce Ministry spokesman said this morning, U.S. and China will hold a call on trade, quote, soon. Kevin Surley, Bloomberg Chief Washington Correspondent, joins us now with more. What is soon?
How soon is soon? No one knows. I mean, in fact, this is really running in contrast with what the administration and President Trump have been signaling, Taylor. President Trump just saying within the last couple of days that he really has no intention of continuing trade talks with China officials, despite his top economic advisors, including Larry Kudlow, suggesting otherwise and saying that the U.S. and China are on track in order to continue with the implementation of U.S. and China Phase 1. But take a look at this chart that we compiled from data with Bloomberg, because China has not been on pace with regards to manufactured goods, agriculture, energy, in terms of what we thought they would be or what they had agreed to under the Phase 1 of the U.S.-China trade deal. And let's also note just the escalation of U.S. and China trade tensions that have emerged since the pandemic, most notably, of course, with the United States revoking Hong Kong's special trade status. Then you take into effect the legislation that the president signed into law regarding issuing some sanctions over Chinese officials who did business with the Communist Party with regards to the special so-called national security law with Hong Kong. And then obviously this broader issue of the U.S. Taking a longer-term strategy of encouraging domestic companies to divest from Chinese entanglements, and legislation that passed in the Senate this summer with unanimous consent that would require Chinese businesses listing on the U.S. exchanges to comply with Sarbanes-Oxley.
Kevin Cirilli, keeping us updated. Thank you, as always.
Yeah.
Now, Nuveen's Brian Nick weighing in on the U.S.-China trade relations, saying, quote, we haven't seen a bigger market reaction to escalating tensions because of all of the other conflict in areas like human rights, Hong Kong, and, well, the coronavirus. The trade deal appears to be intact, with encouraging signs that neither side sees benefits from walking away. And Brian joins us now. Brian, are the markets accurately and correctly, I guess, discounting the lack of a trade war?
I think there's really a binary outcome here. A lot of it depends on the outcome of the U.S. election. I think we're keeping our fingers crossed and expecting there to be no kind of walking away from at least the Phase 1 deal, which would mean higher tariffs sometime before the end of the year between U.S. and China like we had in 2019. But next year, we're going to have one of two paths. I think either a much more kind of multilateral collective effort to get China to implement some kind of reforms in terms of trade, business practices, or it's going to be much more decoupling, less bilateral negotiations like we saw in 2019. But under a second term of a Trump administration, I think you would see more of a concerted effort to pull back from the China relationship. You're not going to see that before the election because I think we'd see the market and the economic consequences. And I think the market's sort of holding its breath right now, seeing which way we might go.
Brian, I'm curious just to switch back to some of the news we got this morning on those jobless claims. Does the market need to throw a panic before Congress starts to act again?
Yeah, my first reaction to seeing the tick up in initial claims, well over 1 million again, was sort of to be of two minds about it. There is a silver lining here, which is the worse that data looks on a week-to-week basis, hopefully the more impetus there is for a fiscal stimulus. If you kind of do the math on this, we have a total of about 26 million people, if you include the pandemic unemployment assistance, the people who are self-employed contractors. There's about that many people receiving unemployment benefits. Take away that $600 a week that was going as of July 31st, but that's now not going to those folks anymore. That's about $15 billion a week that's not going into the U.S. economy. And how long can we sustain that in terms of incomes, consumer confidence, consumer spending? Hoping the two sides get back to the table, probably not until after Labor Day, and perhaps not until the end of September when they need to come to an agreement to keep the government running. So we could be seeing really 2 months of an economic hole here where incomes that were really sustaining a lot of this economic recovery in terms of retail sales, consumer spending, confidence, those start to go away. And 2 months is a long time to have incomes falling and really, showing no signs of meaningfully recovering without some kind of government assistance.
And with that potential fiscal stimulus comes inevitable deficit financing. We had a sloppy 30-year auction last week. The 20-year yesterday didn't look great. Are the markets starting to understand the digestion of all of this increasing supply?
I think so. And I think it's important to put this into context. Interest rates are still incredibly low. The rise that we've seen in the 10-year, the 20-year, and 30-year is really only back to where they were in the late spring, early summer. So we still have very low interest rates. That's been a good thing for the economy. The Fed has done a good job of anchoring expectations, but we have started to see inflation expectations rising. Some of that is undoubtedly because of, I think, the Treasury supply, which is going to be hard to absorb on some level. That may be some of the reasons you've seen the auctions a little sloppy this week. But I also think that there's just, the more indications we get of, say, promising vaccine candidates for COVID-19, the generally better tenor of economic data, the housing market data that we got this week was excellent. The labor market, not as good, but consumer spending and housing has been really good. And so there's maybe less reason to expect interest rates to have to be this incredibly low for sort of on a semi-permanent basis. And you could see a bit of an inching up in those longer term rates. I think overall that's a good thing. We like seeing interest rates moving up. It's a sign that their investors believe more in the economic recovery. But it's hard, on a week-to-week basis as we're going through these auctions, what are investors willing to accept with interest rates as low as they are and with lots of new Treasury supply coming, and perhaps even more coming if we do another fiscal stimulus this year, or there's an even larger one next year, again, depending on the political alignment in 2021.
Well, and you know that the rising rates on the long end, not only growth expectations, but also those inflation expectations. And if yields start to rise a little bit, break-evens are, rising a little bit, but unchanged, and the Fed's not really sure now if we're seeing actually disinflation or inflation. The impact then on real yields, your background within inflation hedging products, what do you do with rising inflation or not?
TIPS are a pretty simple way to hedge against this. We think TIPS work in a lot of different environments. Right now, if the risk is falling real interest rates, as you say, to even more negative territory, or inflation expectations just normalizing, and they're not high. Inflation expectations for 10 years are about 1.6%, 1.7%. That's below where the Fed's target is at 2%. So just a normalization in inflation expectations would perhaps continue to give support to the TIPS market, at least relative to the Treasury market. And gold is a related asset as well. It's more volatile, certainly, than TIPS. It behaves differently sometimes, but it's another investment that has tended to rise as real interest rates have fallen. But again, what we'd like to see is evidence of a stronger economic recovery, perhaps helped by a healthcare solution, a treatment, or a vaccine for coronavirus. And that would mean that I think you'd start to see a real rise in real interest rates, not just a rise in inflation expectations keeping yields up.
We have 20 seconds. Given your Kaya designation, alternatives, where do you go for the most alternative investment right now?
A lot of different ways to go, but if you're needing income in portfolios, and your previous guest, I think, put it really well, just getting an income derived from a portfolio is harder than it's ever been. Looking at farmland as a defensive asset, we know that even in a global recession, farmland is going to continue to generate income because people do need to still eat. And the other thing we're looking at is industrial real estate that really pivots off of the e-commerce trend. We're a little bit more wary of warehouses that are having exposure to imports and exports with global trade declining. But e-commerce is a huge part of the real estate market in the U.S. right now, and we want to be exposed there.
Brian, Nick, thank you for joining us. Coming up, stay with us. Analyst action you need to know. It's in our morning calls next. And later, Bernstein's Dan Suzuki joins us for the opening bell. This is Bloomberg.